All right. Good morning. Good morning. We're live. We're live. It's 7:30 a.m. Eastern, and we are going to be ready to rock and roll here. Just going to get set up, make sure we're live, do the mic check, make sure the video and the audio, everything's coming across nice and clear. So somebody could let me know, please. We got a lot to talk about today. Had a great day yesterday for those in the elite members area. Nailed that short up on the NASDAQ. We'll talk about that in a moment. That was just awesome. And that's one of the reasons to become an elite member is that, I'm posting my commentary when I'm done streaming. So I can't stream all day, but I'm still obviously trading my own account and following the market. So I'm posting what I'm seeing, and the members do take advantage of that. And so far doing very, very well. So happy about that. Okay, I'm going to do a quick check here. Make sure that everything's live. Just give me a moment, guys. Hey, Steve. Good morning, my friend. Just checking a couple things. All right. Looks like we're nice and live. Okay, cool. So we can talk about some housekeeping things in just a bit. Hope you had a good night's sleep, Steve. I'm still a little sick today. For some reason, I got some persistent pink eye. I never get pink eye. The last time I had pink eye was when I had COVID, during all that, back in whatever that was, early 2020. I can't remember, but I got pink eye with the COVID. And, since then I haven't had COVID or anything. And, now I'm still working a good, 12, 14 hours a day on everything, trading and, all the behind the scenes stuff. So I'm not bedridden or anything, but I do feel tired. I got the pink eye. So I wouldn't be surprised if my body's trying to, fight the COVID or something. But a lot of people are bedridden when they get COVID. So if I'm able to work and function and put up good trading numbers, then I'm happy about that. Of course, it'll be nice to have my energy back because I have been quite exhausted, but we're getting through the week and just got to get a strong push Thursday, Friday, and then rest up for the weekend. But today we've got a big day. We've got the European Central Bank announcement coming out at 8:15 a.m. Eastern. That's going to be a big one. And then we've got the press conference, the head of the ECB Central Bank, Lagarde. I believe her name is Christine Lagarde. That'll be at 8:45. And we've also got some more news coming out, I believe, at 8:30. We've got a busy day. I'll check the calendar here in just a sec. But the ECB is going to kick it all off at 8:15. So I'm excited about that. Let's just quickly check because I looked at the calendar a few minutes ago, but there's so much on the calendar for today that I can't remember it all. I got too much in my mind. So ECB, 8:15. That's a big one. The forecast is 4.5% for rates. So they're not expected to do anything. But, sometimes, unexpected things happen. So we got to be ready for that. So the ECB could throw a fly in the ointment. We'll see. That would be nice. It would give us a lot of increased volatility. We've got durable goods orders out of the U.S. also at 8:30. We've got GDP growth out of the U.S. Looking to come in at the forecast is 2%. Wow. So that'll be a big one because that's connected to the CPI inflation numbers. Because if GDP growth comes in hotter than expected, it means the economy might be doing better than expected, which then would influence the narrative that the Fed might have to hold higher for longer, which would cause, bonds to tank, rates to spike, stocks to dump. So you got to be aware of these things when these announcements are coming out. So GDP growth rate at 8:30 is a big one. And then, like I said, the ECB press conference at 8:45 is also very important. That'll move the market. And you guys know how I handle these announcements. I'm not a gambler. I'm a trader. I look for consistent results. My number one priority is to manage my risk and, put up the numbers with the most controlled amount of risk possible. That's the way I like to trade. So I don't hold positions through these major announcements. Now, I hope that these major announcements give good setups on the charts that we can then trade into, but I absolutely do not gamble heading into the setup. So and I hope you guys don't either, because you might win sometimes, but really what happens during these news announcements, the liquidity dries up and it's just, there's no liquidity in the market. So levels that should hold don't hold. and it's just not a good situation for trading. And when you know that, you don't trade, and the liquidity fills back up after the announcement, and everything's back normal again. So that's the way I like to do it. Okay, so we've also got new home sales at 10 a.m. So guys, today's packed. Lagarde is speaking. That's the president of the ECB. She's speaking at 10:15. So apparently she's not gonna feel satisfied with her ECB press conference at 8:45 a.m. Eastern. She's gonna also do a speech at 10:15. But guys, I mean the calendar's just stacked here. You got the natural gas stocks coming in at 10:30 a.m. So we could look at natural gas if we got nothing else shaken. We tried to play the crude number yesterday, looking for a pullback. It didn't pull back. It just exploded. But that was fine. Anyways, we got a very, very, very busy day. I think I said very 3 times, and that's appropriate because it is stacked. We've got, just seeing if we have any bond auctions. You know, guys, the bond auctions at 1 p.m. Eastern, most people don't pay attention to those. Those are incredibly important because they tell you the amount of demand or lack thereof coming into the U.S. Treasury market at 1 p.m. Eastern when they do these bond auctions, and they're different durations, right? Sometimes they're for a 10-year or a 30-year. Those can really move the markets. You got to be aware of these bond auctions. Sometimes I see some people streaming out on YouTube. It's 1 o'clock and the market starts going crazy, and they're like, "Gee, I don't know why the market's going crazy." Yeah, it's a bond auction. It moves the market. So today at 1 p.m. we've got a 7-year note auction. Got to be aware of that. That could move the market. I doubt I'll be streaming by 1 p.m. Eastern because here in Sweden it's quite late, but I will be updating members in the member section of things that we're watching at that time period. So Steve, you can remind me, don't forget about the bond auction at 1 p.m. All right, so that's the news, you guys. I know that was quite a mouthful, but there's a lot shaken, and we got to know what to expect. I know these are the pesky details that lead to consistent profitability, but hey, we got to do it. Okay, so with that said, it's 7:37 a.m. We got plenty of time to prepare this morning because Lagarde, the ECB at 8:15, we're not going to rush into anything. So let's lay the ground. I've updated all my charts this morning before we started streaming. Hey, Andy, how you doing? We got our buddy Andreas here from Austria. Glad you can make it, my friend. Hope you're able to start capitalizing on the stream, Andy. Let's see. Steve said, what is it, 8:15? It's the European Central Bank announcement at 8:15. So it's their interest rate decision for the ECB. And then Lagarde, the head of the ECB, is having the press conference at 8:45, about a half hour later. So it's a stacked day for news, you guys. Yeah, Andreas, you can see that Steve in the chat, he's made about $9,400 on his different challenge accounts and funded accounts on Apex over the last couple of weeks, using OMA and, following everything. And so, yeah, it's there for you, my friend. I know it's hard with work and family commitments. It does take a lot of commitment. It really does. Even when you have something as good as OMA and, you're putting up the types of numbers that we're doing, you still got to be here every day, and you got to follow it and get in the groove. And I understand that that's not, it's not easy for people with jobs. I mean, if I was in California right now and I had to wake up at, 4:30 in the morning, forget about it. That'd be tough for me. So Steve, you're a trooper getting up early out there in Utah. All right, so Steve's got the calendar there for us. That's awesome. Pink Eye fights off COVID, apparently. Okay, that's interesting. I think I must have a light case of COVID, but thankfully for me, I don't want to get political, but I made my personal choice to not get the thingy, and so far that's serving me very well. I haven't had it since I had it the first time, and this appears to be incredibly mild, which is awesome. Okay, but to each their own about all those different health choices. Okay, so here we go. Let's look at the pre-market prep here for ES. Guys, yesterday, I mean, this is just the beauty of OMA. You could see on the NASDAQ, and this is why it's so important, you're getting those updates from me after the market closes at owingstrading.com, because I can't stream all day, right? I can't, but I'm still here watching the markets and waiting for my setups. So yesterday, this is the one we did a video on for the YouTube channel. These are the levels we were just stalking and waiting. So Steve can attest, because he made money on his Apex funded account waiting for this trade. As I was telling him, Steve, we're waiting for price to get up here to 17,776 on the NASDAQ. We jokingly called it the Independence Day trend line, of course, because 1776, the year US was, established. So we called this the Independence Day trend line because it was at 17,776, which is pretty funny. It was a yearly trend line, yearly. I'll show you guys right here. These are the little thingies that I keep an eye on and bring to your attention. So here's a yearly chart of the NASDAQ, guys. Look at this. This is, a yearly bar chart going all the way back to 2015. You see yearly trend run, year after year, up, up, up. You know, here's the congestion entrance move in 2022, the rebound in 2023, and now we're here, right? So what I saw yesterday is this trend line coming across, boom, right there at 17,776. So that's why when you're talking about a confluence of level, you want to make trades that give you a high probability. Of course, we're using the intermarket correlations. That's super important. You got to understand the trade that you're taking within the overall context of the market in that given moment, because stocks, bonds, metals, the dollar, energies, they're all moving as one symbiotic whole. They're not just moving independent of one another. And the better you can understand those relationships, the more it's going to improve your accuracy on your trade. So with the NASDAQ yesterday, I say all that because number one, as the NASDAQ was firing to the upside, bonds weren't really buying it. Bonds were still pretty subdued. The 10-year Treasury note had broken through a pretty key support level, meaning rates were staying stubbornly high, right? So rates were staying stubbornly high throughout the day yesterday. The dollar had clawed back a lot of ground against the euro. Meanwhile, gold was well off its highs, reacting to that higher rate from the 10-year Treasury and the stronger dollar, right? So I was watching the NASDAQ rip higher, just waiting for the right spot to get short, because I could see we were not in the ripe environment for the NASDAQ to close at its highs yesterday. You see, so it's not magic. It's really taking all these things into context, knowing exactly where you are, and then planning your trades around that. So that's what we did yesterday with the NASDAQ. And it was awesome, quite frankly. I mean, it was just such a sweet thing there's nothing that feels better to just plan your trade and be in the flow and wait for that setup. And then when it gets there, just nail it. Like it doesn't, even if you do that, guys, I don't want to give the false impression that you're going to have 100% win rate. You're not, but it's going to push the win rate on your side big time. And yesterday was a good example of that. So as the NASDAQ, we'll talk about the S&P. We got plenty of time this morning, but this is really important, guys, because it sets the tone every day, what we're looking for. We're looking for something similar to this today. Do we know what market that's going to come from? We don't, but we're going to, go through everything and find the market that's going to give us the best opportunity of a good trade at the right level. So with the NASDAQ yesterday, guys, look right here. This is the 4-hour chart. Okay, so we already know what I just showed you. Imagine as the NASDAQ is basically, here around 17,720, 17,740. It's pushing higher. It's pushing higher. Everybody's going long because they don't know that there's a massive, massive resistance level up here at 17,776, right into that yearly resistance. So I'm seeing that on my yearly charts. I told Steve about this, and people in the chat, I think as long as a week or two ago, I said, guys, we got to keep an eye on this yearly trend line. We don't know when we're going to get there, but when we do, it's going to, there could be an opportunity up there. So this was the day we saw it heading up to that yearly trend line. And then here's the thing, guys. When I saw the 4-hour extension right up here, confirming that, and then not only that, look at the hourly chart to the far right. This is the hourly chart. You guys, I posted this on the YouTube channel and Facebook, I think even on Twitter, just trying to make you guys aware. So the question, this is why OMA works through all market conditions, because you have a very logical approach to structuring the trades based on the price action. So now that I know I want to get short up in here somewhere because of that yearly trend line, right? 17,776, 17,780, that was the level right there, right? If I know I want to get long there, I start looking for different resistance levels across my 4-hour chart, my 1-hour chart. Of course, I'm aware of what bonds, the dollar, the rates, I'm aware of what all that's doing. But here on the charts, I'm looking for this confluence of resistance into that yearly trend line. And then what do? The logical approach, as the market is trending up here on the hourly, do I want to go short, even though I have a level that's predefined that I think is going to be strong resistance and way down on price? Do I want to just willy-nilly throw in an order there and just, pray to God that everything works out? No, I want to wait and let the hourly chart confirm. So right here, and Steve can attest to this, guys, this is all live in real time, calling it out before it happens, trading the hard right edge of the charts. This is not, we're looking back now, but we're not like these typical people you see out there. Oh, I would have done this, and I would. No, we actually did this, and I'm explaining how we did this live in real time. Is that as the hourly chart was trending up here, I was just waiting for confirmation. I'm not going to go short against this strong hourly trend because who knows, it might end up going higher than I think. That can happen. But as soon as I had my confirmation here, which is some of the stuff that I'm teaching in the course, you know exactly what to look for. I posted that in the elite members area chat and just said, guys, you know, here it is. So patience wins the day. And that was just such an amazing trade from yesterday. So those are the types of trades we're waiting for. Unfortunately, yours truly took profit way too early. I was tired, you know, I got whatever, I have this COVID or whatever it is. But so I shorted up in here. I think Steve also shorted up in there. I actually covered here just above I made about close to 50 points, which was good, but on 2 contracts. So, but it was right here above the extension because I didn't know this was going to happen. I suspected it probably would, but I didn't have the energy to sit around and, you know, manage this trade. So picked a good spot, picked a good exit, made my money and left. So those are the kind of trades that we're looking for, which is awesome, you know, so I'm really happy about that. So let's go ahead and look at ES. Let me know if anybody has any questions in the chat. Yeah, Andreas, I hear you, man. That's the way it is at the moment. I totally get it. It's busy with wife and kids and job and all that stuff. And with your job, you definitely don't want to be trading while you're at work. I'm not going to tell the chat what Andreas does, but let's just say he needs to keep his eyes on the road at work, so he can't trade. So with ES today, guys, this is here's the daily chart to the far left. You know, we hit all this resistance up here. I think the party's over for now. We've been talking about this divergence between stocks and bonds. The divergence can only last so long before something has to give. I've been maintaining that I think it's stocks that are going to give and roll over and catch down to bonds because rates are stubbornly high and staying high. The dollar is still strong. So I think stocks are going to catch down. Now, if stocks are going to catch down, what does that mean? Well, it means on the daily chart here, we're going to have to start seeing evidence of resistance. Well, we saw that yesterday. And then we're going to have to see the daily start to roll over and exit congestion down, which I think we're setting up for now. Does that mean it's going to happen today? I don't know. I don't have a crystal ball, but I'm going to use the scoreboard and the intermarket asset correlations and OMA to give me very good insight as to whether or not that is happening today. And we're going to trade it, you know, as effectively as we can. So here with the daily ES, you know, you've got, I think we're going to have a choppy day. I really do. The ECB's coming out. We got all this news, so that's going to add chop. But, you know, here, the daily here is still pretty bullish. Yeah, we had that pull off, you know, that yesterday that we nailed, which was awesome. But you still got a lot of support down here at 48.90. So I don't expect, you know, that we're just going to collapse. Okay, now if the ECB comes out and raises rates, then yeah, we'll collapse, but I'm not counting on that happening. So I think we're going to have a choppy day, range bound. I would look, whatever system you're trying to employ, I would employ the chop system today, okay? I would not employ the breakout momentum strategies today on ES. Just that information, you guys. Well, you can check my record. Look back at the end of every day when I make these observations. You know, they're not 100%, but they're good. And if you trade on the right side of the market, meaning directionally, but also you have to structure your trades within the overall context of what the market is doing, right? So if you're a great momentum trader, but you're trading breakouts into a market that's constantly, you know, reversing back into the range, you're not going to make money that day, right? So you got to know what system to turn on and turn off based on what you're seeing that day. I would expect some chop today in stocks. Now I'm saying that because how does that influence my trading and our trading here? I'm very careful. If I'm looking for chop, I'm going to be more aggressive on range strategies that I employ in my own trading and teaching the course. And I'm not going to be looking for, you know, trend-based strategies. So that's really important. Whereas yesterday I was looking for the trend reversal strategy on the NASDAQ. That's what I employed. That's what enabled me to, you know, nail that short so effectively. So today on ES, look for a lot of chop, and I'm sure that's going to be the same, you know, when we get to the NASDAQ and the rest. But we're going to get even more information as we cover, you know, what do bonds look like? What do the metals look like? It's going to shape our overall sense, you know, what's going on today and how to trade this. And this is, you know, why we're consistent. Let's look at the NASDAQ quickly. We don't need to go through the Dow and the Russell too much. We'll just look at ES and Q. So here's NQ. You know, it'll be similar, obviously. So yeah, NQ, you know, still same as the ES. I think you're gonna see some chop. You've got a really nice low connector turning point up in here at 17.7. Now I would expect you'll have resistance here into 17.7, and you'll have, you know, quite a lot of support down here. Yesterday's low, below yesterday's low. So, you know, a range for the NASDAQ today. I think it's going to be choppy. And you guys got to remember this. You know, I learned this from my mentor, you know, a long time ago, and I'll never forget it because I read his books, you know, literally dozens of times, and his books were, you know, there were piles and piles of them. And this guy was just incredible, and he knew everything about everything. He makes me look, you know, just it's amazing. Anyways, so what he always said was that when you're at tops, you know, big tops, you know, these things will get super volatile. They pump, they pump, they pump. They're going to keep. So when I'm looking at all the charts right now, the yearly, the quarterly, this is why I'm so conservative the last 2 weeks since I started live streaming, right? I can't control the environment in which I begin my own live streaming to the public. We're doing great so far. This is why I'm so conservative right now, because I'm aware of the context of where we're at and what's happening. We could be at a potential major cyclical top here. Still too early to tell, but right now that's what the evidence is showing. And if that's the case, you're going to see an enormous amount of continued volatility up here, which means you've got to pick your spots incredibly carefully. And, you know, for those of you who, you know, maybe your accounts are a little smaller, trade the micros up here. That's what Steve did yesterday when I made the call on the NASDAQ. He traded some micros because you've got to give yourself more room. You don't want to be going in heavy. Guys, I'm rooting for everybody, even the people out there on YouTube who, quite frankly, look like douchebags, but I'm still rooting for them. I don't root for people to fail. I want everybody to succeed. Even the guys on YouTube who are cussing out their audience and calling them names and treating them like shit, which is really weird. I don't know. But so these guys like that, they're putting on 10, 15 contracts. They're scalping. You mark my words. You know, they're, oh, I made 20,000 today. I made 30,000 here. I made 20,000. One of those slip ups on 10 or 15 contracts on the NASDAQ with where we're at right now, you're going to take 100 steps forward. All it takes is one step back and boom, your entire account is gone. You can lose, you know, tens of thousands of dollars in, you know, seconds in this kind of a market. So, and I know that because I've been around this a long time, and I'm, you know, trying to guide you guys carefully through a challenging transition time in the market. So, you know, I hope those other guys don't blow up, but I know they will because I can see how they're trading and it's not sustainable. So let's see here. We got, I'm just on my rant, my morning rant, you guys, you know how it goes, but I'm going to check the comments real quick. Yeah, Formula One driver. Exactly, Andreas. That's funny. Yeah, Steve, exactly. That was a difficult trend to reverse yesterday, but we did it, right? I mean, it's pretty incredible, pretty cool. Yeah, Andreas is Schumacher for sure. All right, so that's what's important to keep in mind when we're up near this, you know, potential major top on the NASDAQ, right? And if you're a broker from UBS or you know, Deutsche Bank or wherever you guys keep your statements, they call you and go, oh, now's a great time to get really invested in the stock market. Just tell them to say F off. It's just not a good time to be fully invested in the stock market. Oh God. But you know, these brokers, they're not bad people. They just do what their superiors tell them. And their superiors who own the bank and run the bank, they're the ones holding all these shares and they need to unload it. So who are they going to unload it to? You know, they got to get the minions to come in and start buying up here. So that's where you get all this pumping. You get insiders dumping and you get retail, you know, buying, and you just get these major cross flows. But in the end, the retail trader loses out and the market corrects. So that's what we're in the process of seeing. Okay, let's look at the 10-year treasury. This is really important as well. Water here, guys. So this is exactly what I'm talking about. Look at this, guys. This is the daily chart of the 10-year treasury. Look, and I know most of you understand this, but I'm going to constantly repeat it because there's new people joining who, you know, they don't understand yet. There's an inverse correlation between, you know, what you're seeing on the charts with the notes and the bonds. Look, notes just because it's 10 years, bonds are longer term. You can just call them all treasury bonds. It doesn't matter. So this is a 10-year note, call it the bond. It doesn't matter. When this chart goes down, it means that rates are going up, right? The stock market does not like higher rates. Gold and silver and platinum and copper, they don't like higher rates. So yesterday, when I could clearly see using Owings market analysis that treasuries were clearly, you know, they had a pattern that should have been bullish. It started out the day bullish and you had a massive reversal. I could see this unfolding during the day. So that's what gave me the confidence to take that NASDAQ short at the high and pick off the trend reversal, not just because I had the OMA patterns up there and I waited for my specific setup. But I also had bonds here. These are the notes, and bonds were doing the same thing. We'll look at it in a second. They were dropping, rates were rising, and the dollar was strong while gold was dropping. So these are the things that we're watching while we're trading together. You say, Andy, well, why are you so damn picky on every trade you take? This is why. Because I take the trades when I see everything here across all these asset classes that I like, and it matches up with my Owings market analysis, and that's what gives us the hit rate that we have. Go look at our hit rate. It's good. Better than good. That's an understatement. So, and this is the reason. It's not magic. It's using the intermarket correlations with OMA that gives, you know, the good hit rate, which is why I'm, you know, so careful and patient waiting for my setups. I love to take the setups where, like yesterday with the NASDAQ, it's juicy. I can't wait for it to get to my level. Like those are the ones that I love to take because I know they're right? Because especially patience when you're stalking a trade like that. So look at the 10-year this morning, guys. So here on the, I'm not going to go in the monthly, weekly chart. We've already done that. I post the weekly forecast in the members area before every week, so you guys get the top down, you know, yearly, quarterly, all that good stuff. But needless to say, the monthly is very bearish on the treasuries, right? So it's heading down, meaning rates up the whole month of January. This is why coming into this month, I've been so bearish stocks. And, you know, not that stocks can't remain irrational longer than you think. They can. But with bonds continuing to head down, upward pressure on rates, you know, stocks are, you know, they're fighting a losing battle up here. So, you know, and that's what's causing a lot of this chop as well. So today with the treasuries, and we're going to know from the ECB here in about 15 minutes at 8:15 Eastern, we'll see what they do. And rates now look like they are, you know, this looks weak. So you've got a lot of resistance now today up in here on the 10-year, up into about 111.10, right in here. So as let's say the stock market, I'm telling you guys how I do this. Let's say the stock market starts today and rallies, right? As it's rallying, it's doing so because bonds are temporarily rallying. That means rates are temporarily coming down. Of course, I'll look at the dollar, I'll look at the metals, all that other stuff. But just, you know, thinking about stocks and bonds right now and rates, if I see the stock market going higher, and then I see it's doing that because bonds are temporarily bid, meaning rates are temporarily coming down, I look at my OMA levels here and I go, well, I got a ton of resistance here on bonds, meaning rates are probably going to now reverse back to the upside and bonds will reverse back to the downside out of the resistance level. That tips me off to a potentially good spot to short the odd one out. Like if the NASDAQ is rallying and I can see bonds are going to reverse and the dollar is strong and I see gold's not buying it, you know, that's what sets up those types of trades. And it's not always the NASDAQ. Yesterday it was the NASDAQ, but sometimes, you know, silver or platinum will be the odd one out. So you got to find the odd one out. You know, find the ugly duckling walking by itself. That's the trade you want. And oftentimes it's the trade that nobody's interested in, right? Everybody wants these, you know, super volatile, high flying. Yesterday it was the NASDAQ, which is volatile and high flying. But oftentimes some of my most favorite trades are, you know, platinum or silver or some of these other markets that, you know, ultra bonds. They don't get a lot of attention, but gosh, they give fantastic setups. Okay, so rates, you know, if the daily here is going to stay in congestion and head back up here, I mean, we're going to have to get through this pretty wicked resistance level on the 10-year. And I bet you I haven't looked at the 30-year or the ultra bonds yet, but I'm guessing the 30-year and the ultra bond is also even a lot weaker. Yeah, so you can see the 30, this is the ultra bond. The ultra bond is just a longer treasury bond. The 10-year is a 10-year obligation. That's why it's called a note. The ultra bond is like, you know, I think they're technically between 27 and 30 years out or something like that. And I think the 30-year treasury is between like 25 years and 30 years. We don't need to know all that. We just need to know these are longer duration. So when you're looking at the yield curve, you know, this is the long end of the curve, and that's a whole nother topic for another day. That also influences decision-making sometimes. But you can see here that the ultra bond, you know, is trying to exit congestion, the downside. I'm not getting into the volume profile here, guys, but I do use it just to understand where we're at. And, you know, your last major area of acceptance here on the ultra bonds is 125.30. So, you know, you can see the rejection area is coming across right here in the middle of our moving average envelope. So again, this is a lot of resistance here on the ultra bonds. Now, do we have a crystal ball? Of course not. It's coming into the day with the game plan, if then scenarios. So I'm counting on bonds being sold into today on rallies And I think that's going to keep rates elevated. I'm going to keep an eye on the dollar, of course, as well. That'll tell me what's going on. But if something happens with the ECB or whatever else, it doesn't matter. Great. The market moves. Things happen. So if bonds were to spike like this, great. That means rates are, temporarily collapsing. So, metals will benefit from that. Stocks will benefit from that. So we'll switch and we'll play the long side. So you always want to trade the market that's in front of you. Trade the market you see, not the market you think, not the market oh, well, this has to happen. No, nothing has to happen. The market will do whatever the hell it wants. We need to analyze and put ourselves in a good position to get good trades and make money consistently. All right. So, all right, no questions. Let me know. I'm still going through the charts here. It's 8 o'clock. We're not doing anything at the 8 a.m. close, obviously, because we're not gamblers, and I'm not taking a chance on Lagarde, spooking the market. Let's let the other YouTube channels do that. They're more gambling inclined. Okay, so let's look at gold. See, so now we're starting to put together the picture, you guys, right? We've looked at the indices. We've got an idea of what we think is going to happen there. We've looked at bonds, right, which is connected to rates. So now we got an idea of what we think is going to happen there. Now we look at gold, silver, copper, platinum. These all plug into different ways. We look at crude oil, natural gas, and the US dollar. So all these things are really, really important. So here, what you can see on the gold chart here, look at the daily gold. See, this was another thing yesterday. What influenced that trade, and I'm going to continue to talk about these guys because I'm teaching you and I'm explaining to you. It's not just yesterday's trade. This is every trade. All these things are how we select every single trade, right? So yesterday, as gold was going down here on the daily chart, at one point we're up around 2030 for the day on gold, but as the NASDAQ was ripping higher, gold was just drifting lower. And that told me the fact that gold was drifting lower and the dollar was getting stronger while bonds were dropping and rates were increasing, gold was confirming for me that what I was seeing in bonds and the dollar was correct, and that stocks probably had to come back down to reality a little bit. And where would they come back down to reality? Well, then I had to pick my spot using all my OMA stuff. So, that's how we use these markets. So for gold today, right, the question is today, well, if bonds are going to be weak and rates are going to go up and the dollar is going to get stronger, potentially we'll look at the dollar, and gold is going to probably continue to go down. But we still have a lot of support here on gold. We had a lot of volume yesterday. You do have an area of acceptance here in the volume profile. So, gold today, I have no idea what's going to happen. We might go up, might go down. We do have a potentially strong support situation here with Owings Market Analysis that I'm going to watch very carefully. So if gold starts to hold its support down here, and if bonds stabilize and push up through their resistance, that's going to change how we trade for today. So you see, guys, how I'm laying out the scenario. I don't need to know. You go, oh, how do you know what's going to happen next? I don't know what's going to happen next. I'm just, coming up with different scenarios based on OMA and the intermarket correlations, and that is how we put our trades together. I mean, guys, each one of these days we live stream is like a full-on webinar for people to go back and pay attention to and learn this stuff. And then it takes time and practice to get used to using it during the day. But that's why we're here together. So gold, we're just gonna have to wait and see. But certainly, as I've been talking about, the monthly chart is very bearish on gold, just like it is on bonds, which means rates are probably going to continue to go higher. So, right now on gold, I don't generally trade gold because gold is just telling me what other assets are doing. But if I see a good trade in gold, I'll take it if I don't have anything else. But gold is also just one of those markets, like it's not the lowest hanging fruit. Like if I have a choice between shorting gold and shorting bonds, I'm 100%, they're going to move together mostly. And I'm going to short bonds because it's just a much less volatile, thicker, easier. Nothing's easy, but it's a, it's just a more orderly market to trade, right? So that's important. So let's look at silver. I'll drink some water. All right, so looking at silver here, so got a little bit of a divergence here between gold and silver. This is also, there's just so many little nuances, you guys. So silver right now is rallying. I'm going to be really interested in shorting silver today. I should have, woulda, coulda, shoulda, but looking back, I always do a review of every day at the end of every day, right? I'm at the point in my own career, I don't write everything down anymore because I just don't have time and it's not necessary, but I go through and I look at the charts and And I used to write everything down. Now there's too much to keep track of. But looking at silver, what I can see from yesterday is I should have shorted on the exhaust into 2304 at the 8 a.m. hourly close yesterday. So today I'm going to be looking at that low 23s area. Now there's a lot of resistance up in there, a lot. So every time we test up there so far, we fail. So we're going to keep our eyes on that 23, 2304, 2305 for silver. Very important. I say, oh, we're keeping an eye on it. What does that mean? Well, we're waiting for the hourly to confirm what, to get up there. Tell us if we have an OMA pattern, if everything's looking good with OMA. Oh, and then what does the scoreboard look like? I call the scoreboard all the markets and the intermarket correlations. The scoreboard's kind of more fun, right? So if silver gets up there and I see what I like on the scoreboard and all other things being equal, then I'll go short silver, right? So we're going to wait and see. We got the ECB in less than 10 minutes, which is exciting. I love these types of days. Something's going to happen. Let's look at copper. The copper is connected more to the overall economy and the stock market, right? So it moves a little bit different than the more precious metals, right? Gold, silver, platinum, copper, they're all metals. They're similar, but there are differences. So copper, you can see, has rallied the most. Look at the daily chart, guys. I know we'll eventually get some women in here too, but I just say, guys, to everybody, look at this daily chart. It's rallying. Why is copper rallying? Because stocks are rallying. Is copper going to come back down to earth with stocks? Yes. So am I waiting to short copper? Yes. So copper, I love it. It's super overextended. If copper is going to collapse, stocks don't even need to collapse. Stocks just need to stop squeezing higher, which I think they're going to stop doing now today, especially depending on rates in the US dollar. If that happens, copper could set up some excellent shorts. And we had some great shorts on copper. I think it was last week. I don't remember. I lose track of the trades, but copper I'll be looking to short today probably, because the monthly chart is still bearish, and all we've done is just go right back up to where we started the month. I'm looking at my other charts over here, guys, when I'm not looking at the camera. We've just gone right back up to basically where we opened January for copper at about, I can't see that price. It doesn't matter. It's where we are now, 3.88, right? So we're kind of back to where we started January. And I think we're ultimately going to, go straight back down. So look at the daily. I say all that again. I hate to bore everybody here, but I absolutely love this stuff. Not just because it's so much fun. It's like chess. You got to figure stuff out and think about different scenarios. But when you do it correctly, you get paid, which is kind of the point, and also a lot of fun. So here on the daily chart, copper, look at this, guys. This is something we talk about a lot in the course. I'm not going to go into too many advanced concepts. Steven knows what I'm talking about. There's a lot of resistance here, a lot, right? So we're going to be keeping a close eye on copper today. We're potentially shorting up in here for, resistance here to a move maybe back down here. It's a nice little move on copper, right? Copper is a great market. So we'll wait for that. Let's look at platinum. See ya, Andreas. Take care, my friend. You can listen on your headphones while you're driving around. This is like therapy. It's trading therapy for all the people who followed the gurus before. All right, so looking at platinum, yeah, I think platinum's going to be definitely some good shorting today. Very bearish. The daily, you got a lot of resistance up in here, 912. I thought there was a chance, had we held on to those gains yesterday, I thought there was a chance we could have pushed up to 935, 940 for the week up here for platinum. But with rates, the reason platinum couldn't do that is because of what we're seeing, the upward pressure on rates as bonds are dropping through their support level. That's weighing on platinum. So the daily congestion resistance level here, we're probably cycling back down to support here on platinum. So see how we're starting to put together a picture for the day, guys? It's like, I think stocks, we had a great play yesterday in stocks because, it was moving, it was going up, and we picked the top pretty nicely there for the reversal. That was a great play. Today, I think stocks are going to be a good place to lose money. So if you want to lose money, go trade stocks today, unless you employ a very good choppy system that accounts for volatility and range expansion. Then you can do okay in stocks. But most people won't know to use that system today. So the lowest hanging fruit today is going to be most likely on, gold, silver, not really gold. I don't trade gold, but silver, copper, platinum. These are the ones we're looking at. I even think bonds look maybe a bit choppy today. So, but if bonds just keep slowly eking lower and rates are going up and the dollar's looking strong, metals are going to be fantastic for shorting. So, I want the fruit that's just hanging right here and you just grab it. I don't want to try and reach to the top of the tree and climb up there. Let's just take the lowest hanging fruit. I think we're gonna have some good moves today. So that's platinum. That's the metals. Let's look at crude oil. So crude oil, we've been waiting for this, push to the upside, but it keeps getting smacked down. It's kind of grinding higher now. I don't trade crude often, but when I see a good setup, I'll trade it. But again, back to the lowest hanging fruit. I mean, one of my students, Aaron, he's one of the best crude oil traders I know. I mean, he's just a monster on crude oil. And for me, crude oil is just, I'll take my setups when I see them, but I like the more calmer, orderly markets like bonds and metals. Doesn't mean I won't trade the indices like NASDAQ yesterday. It doesn't mean I won't trade crude. Just I got to see something kind of extra special on these markets. So, but today for crude, I mean, you've still got a lot of support on the quarterly, the monthly. The weekly looks to be trying to exit congestion to the upside. Daily's in a nice sustainable trend run to the upside. So you got to continue to look for a lot of support on crude here into, you see how we're just nicely grinding to the upside. Every pullback into the middle of the envelope here is being held. So that's where we got to look for a pullback. We don't always get it. Yesterday, we were looking for a pullback down here. It didn't come. So you just ignore it. You don't trade that market. Today, I'll be looking for a pullback here, 74.50 on crude, something like that. So, and then again, when I get that pullback, what's the scoreboard doing? What is my OMA pattern telling me on the hourly, the 4 hourly, all that stuff, right? So but crude oil, definitely, looking bullish for now. We'll see what happens. Let's look at natural gas. Because natural gas, we got the number coming out at 10:30. So we will trade that number if we're not in another trade at that point. We can come over here and maybe pick off a good spot on that news announcement for the natural gas inventories number. Nat gas is obviously super volatile, but I think nat gas is going to be, just like I said yesterday, we're done with this dump on the weekly. Remember, we talked about this dump here, and now I think we're going back up here to 2.8. So if that's going to be the case, the daily will continue to be well supported here into pullbacks. Yeah, 2.22 down in here, 2.24. A lot of support down there on nat gas. So if we get a nice situation to buy down there later, maybe we will. We'll wait and see what the market gives us. Okay, let's just finish off our pre-market analysis here with the euro and the pound. I've got all the other currencies, the ags, Bitcoin, Ethereum, but we look at those when there's really just nothing else to do or trade, right? It's not about quantity, it's about quality. Right now, there's plenty to work with on the major markets. They're the most liquid. They give the lowest hanging fruit. So, but we will look at Bitcoin and Ethereum when we have time, because I know people like those, and I'm, slowly following them more myself. So here's Euro US dollar futures. This moves just like the Forex Euro US pair, but when you get to like the dollar yen, right? The future moves inverse because it's not dollar yen. It's on the futures. It's yen dollar, right? Just keep that in mind. So the euro, I'm just looking at some other charts here. I mean, the quarterly looks very bullish, meaning strong dollar, for the next couple of months. This is why I think we're heading into some kind of a little, I don't want to say black swan, because if you pay attention, you can see the bank term funding program is ending in March. And, the Fed just went to a lot of banks and was like, oh, your bonds are like getting hammered. They're super underwater because you bought all these bonds at 0%. And we just raised the rates from, 0 to 5% or whatever, the fastest we've ever done. And now all those bonds that all these institutions, pension funds, endowments, all these hedge funds, they bought all these bonds at 0%. And now those are super underwater. And the Fed, with the bank term funding program like Silicon Valley Bank, they went there and they said, hey, look, we'll just take those bonds off your book. We'll mark them to market. You don't have to take that huge loss. It must be nice, right? I wish I could trade, and at the end of a horrible day, somebody, the tooth fairy or the money fairy just came to me and said, hey, Andy, don't worry about it. Just here's some more money. So the banks get that privilege, right? And I understand they do need to protect the system. There is like these globally important systemic banks, whatever that acronym is. But with the bank term funding program, in March, this March, is when allegedly the Fed is now going to go back to these banks and go, okay, here's all your crap back. It's like, okay, nothing's changed. Rates are still, 5% or whatever they're at. These banks are still holding, massively toxic assets, mostly bonds that are way underwater. So how is the Fed going to handle bailout 2.0 when the bank term funding program ends in March? Well, we don't know. We're waiting to see. Are they going to extend it? Maybe. That's probably what they'll do, but they might not. And so this is why I think you're seeing, I say all that because you're seeing the stronger dollar now. You're seeing bonds drop, rates go up, right? You're seeing these things and the metals drop as a little bit of a foreshadowing of some liquidity event that's on the horizon. Okay, it's very, very important to know about these things and what's going on. All right, so for today, right, that's all the next couple months. What do we expect for today for the Euro US? You know, look, it's a mess. Look at the daily chart here. This is the daily chart. So is it going to go up or down today? I really have no idea, but I will be keeping an eye on it within the context of all the other markets to give us the reads on the markets we want to trade. So summary for today, guys, is definitely, all other things being equal, I think metals are going to be some good shorts today, potentially. That's what I'm going to be paying attention to. Maybe getting long some crude oil, some natural gas, depending if that sets up. You know, we're not going to trade the Euro US, but we'll use it to gauge dollar strength, risk on, risk off sentiment. Bonds, I think, are going to be choppy along with stocks, so probably going to stay away from those, but we'll be reading stocks and bonds to give us a sense of what's going on and if our metal shorts are valid for the day. So that's the way we do it, you guys. Hope that makes sense. If anybody has any questions, I've now turned off the function. There was a function that was on where, I don't know, you had to have like a YouTube channel to comment or something. I'm pretty sure all that's off now. So anybody who wasn't able to comment previously, you should be able to comment now. So if you want to ask questions, don't be shy. And if you want to just hang out and watch, then that's okay too. But we're an open book here. We go over everything, talk about everything, and we have fun. That's all we can do. Okay. So ECB just came out. I'm guessing nothing happened because the Euro US is stuck here. So they probably left rates unchanged as expected at 4.5%, but I'm going to check my calendar just to make sure. Give me a second, you guys. Yep, 4.5%. So, you know, I'm sure Lagarde will say some stuff at her press conference at 8:45. She's got the speech at 10:15 or whatever that was. But more importantly, now coming up, we've got durable good orders, which is an inflation number, and GDP growth rate for the US. So we're going to see some fireworks here in about 12 or 13 minutes. And I am willing to play these fireworks, you know, similar to the way we play the stock market open and, you know, other news numbers sometimes. So I want to see. So the way I do that, you guys just got to bear with me. I'm struggling on the energy levels, but just powering through because there's no time like the present. So looking at the metals, right? Because those are the ones that I want to keep an eye on today. And I would kind of, you know, probably for the, it's hard to say, but, you know, gold and silver are going to be very sensitive to the durable goods and the GDP for sure. Silver, you know, I know we got a nice resistance level up there. Copper as well. I think copper could be a good short. We're gonna keep a real close eye on the metals, see if we can find some levels heading into durable goods and GDP. So we'll treat it like the stock market open. If that sounds good to Steve, sounds good to me. Copper is kind of the one I like just because it's gotten the most ahead of itself, right? You see how gold, silver, and platinum are all heading lower, and copper has been dragged higher because of the profound exuberance in the stock market, profound unfounded. That makes sense. Makes sense to me anyways. I guess that's what's most important. But this exuberance in the stock market is what has lifted copper here. And I think copper's, you know, just overdone itself to the upside. So heading into the news announcement, which could cause some volatility, I would look at copper here and say, well, what do I have? Well, let's take a look, you guys. Nice resistance up here on the daily. We already know that, right? We've got a 4-hour exhaust for sure. Closed on the high, guys. Once closed on the high there on the 4-hour, it couldn't even make one more tick higher. And we're heading down. You know, that's flashing red sirens. Exhaust potential for reversal to the downside on copper for the 4-hour chart. So if that's the case, do we want to look for a level on the hourly? Yeah, I mean, would I be willing to like try and short copper up around these highs or slightly above these highs if they were able to get it up there and take out some stops? Yeah, I'd be willing to short up in there, you know, because I think the 4-hourly would head down here to 3.84, which is kind of down near our daily support level. So that could be a nice move on copper to potentially short that if we get a good situation, you know, out of the GDP durable goods. So let's keep an eye on copper because I think that's the one I like. What do you think about that, Steve? Does that sound good? Do we get approval on copper? Everybody's in favor of copper? I hope so. All right. Plus, there's a funny joke that this comedian does. He talks about white meth heads like to steal copper. Really funny. Every time I'm trading copper futures, I think about that joke I heard. It's so funny. All right, so copper, we are in the March contract. And copper is just kind of one of those things, you guys, where, you know, I've talked about this before, but I'll talk about it again. I don't trade symmetrically. I don't always put, you know, X number of contracts on whatever trade. I base it on the situation. Like yesterday on the NASDAQ, I only went 2 contracts because if I was wrong, you know, the NASDAQ was super volatile. And if I got killed, I didn't want to lose, you know, $2 grand or $3 grand, right? So I base the amount of contracts that I'm trading on, you know, the setup, which are always, you know, we're always patiently waiting for the setup. But, and then how good do I feel about the setup? How good do I feel about the intermarket correlations? What asset are we trading? You know, copper is a little bit of a smaller contract, right? So, whereas on silver, if I'd go 1 or 2, sometimes on copper, you got to go 2 to 4, right? Because it just, you know, you got to get something out of the trade. So just keep those things in mind when you're trading. Okay, so she 170, copper looks good. Nice. It had a big run up yesterday. Yeah, I think so. I think so, she. Because that's what I'm seeing as well, just across all the different charts here. And I think that we're going to be helped with the copper short by the fact that the, you know, stocks, I think, are going to be chopping around today. Bonds, I think, are going to be leaking lower. You know, dollars stronger now against the euro. I think copper's kind of outdone itself to the upside here. I agree with you. So that's kind of why I like it for potential short. So now it's up to you guys in terms of, I think copper's, you know, I would be shocked. Anything can happen. I'd be shocked to see copper just, you know, push higher today and finish on the highs, but anything can happen. But I think the short side is a pretty, you know, pretty good analysis here. We got a lot of stuff going for us. We'll get more information throughout the day as the scoreboard develops. We see what bonds are doing, you know, rates, dollar, etc. But then it's up to you guys how you want to play this, right? So the way I'm going to play this, and you know, our typical trades, you guys, on the hourly closes, you know, those of you who've been here, I will tell you when I have time to plan the trade. I will say, okay, we're shorting platinum at this price, you know, or I am, right? I'll tell you that. But on these news announcements and the stock market opening, I don't have time to do that because I have to make decisions on the fly. So I'm trying to prepare you heading into the announcements, which is what I do for myself. So for copper, you know, you got 2 choices. You can, you know, just get short and pray for surf, and maybe it'll just drop. And, you know, like yesterday with the crude number, I had a number, I think it was like down into the mid 73s, that if crude was going to pull back, I was happy to try and get long there on the back of the crude inventory numbers. Crude didn't pull back. It just, the number came out and it just ripped to the upside. Okay, I missed it. Stuff like that doesn't bother me because why should it bother me? I don't know what's going to happen. Like, I don't have a crystal ball. Market can do whatever it wants, right? So copper, I say that because copper now, it might just, you know, GDP and durable goods might just come out and copper might just tank. I'm not going to be in because I don't take those types of trades. I like to put my order at a level. So I'm going to be looking for, you know, copper can get pretty volatile. You know, we know that. So I would just look at where can I maybe get a great deal selling copper and just dare it to get up there. I mean, for me, it would be somewhere up above the highs for the day. You know, if we look at a similar exhaust pattern, I like to do scenario analysis because this is the 4-hour exhaust here that I'm seeing on copper. I'm, you know, structuring this trade idea based off of. So I like to go back because each of these markets have different personalities, right? So, you know, if you're going to, an exhaust for a reversal in copper is going to be different than NASDAQ, than the Russell, than gold, whatever, right? So here we can see there was like a little bit of a push up exhaust. You know, it just reversed. It never went back to the highs. So is that telling us something? Maybe. So I'm looking at these, you know, similar. So here you can see there was no exhaust there at all, which is why it probably was able to push higher. Here you can see as that exhausted there, it just went straight down. So on this one here, it held the highs. So, you know, recent data, just, you know, eyeing it, there's nothing statistical about this, but just eyeing the recent data, you know, generally speaking, it looks like copper likes to hold, if the level's correct, it looks like it likes to hold the level and go. So, you know, would I be willing to take a shot? Certainly here on the hourly chart, you've got that extension there right near those highs. So, you know, somewhere up in here, 3.89 is what I'm going to be looking at for copper. And again, I'm not setting an order because I just don't do that. But for those of you who are more aggressively inclined, I'm going to be watching this 3.89 level very carefully. And I'd be looking for something that spikes up. Kind of, I can see the price action. If I like what I see in the moment there, you know, I look at the scoreboard, I see how's everything else reacting to the news. I got to make a quick decision. And if I get short, then I know my risk is just here. And if it works, it collapses back down. And that's how I try and make my money on these types of trades. So that's how I'm going to be playing it. You have any good levels, She 170, on your copper? You like trading against the highs that are in place already? And Steve as well, let me know if you like any levels. But these are the levels I like. Oh, it's exciting, huh? I think we did a good job prepping. On my nose real quick, you guys. And when you're sick, you just really appreciate not being sick. Oh, gosh, I got my lighter in my pocket from my cigar last night. COVID is not stopping me from my nightly cigar. But I don't drink, so I think that's what makes the COVID not as bad. Like, just not ever having alcohol in your system helps a lot. Drinking is a bad idea. I used to drink, but not anymore. I recommend not drinking if you want a clear mind and lots of energy. So 3.9, yeah, I think so too. Definitely. So that's what we'll be looking at. We've got just about 3 minutes to go here. Take a look at the scoreboard. I mean, everything's just going to be waiting. We'll look at the Ultra Bond. See, because I got to look at this as well. If I look at, you know, I think rates, you know, I think we're going to see a choppy day in bonds and a choppy day in stocks, which, you know, I do think copper, there's a lot of resistance, but it could also be a choppy day in copper as well. I want to short it. I'm just saying, I'm thinking to myself, I'm thinking out loud. Because when I look at the, I'm just going to look at some of the higher time period stuff on copper here real quick, you guys. Look at some of the volume profiles. Yeah, just looking at the monthly, weekly, daily. Yeah, that was, I think we're going straight back down, guys. Look at the volume profile on the daily on that move yesterday. look at that. That's copper volume profile for yesterday. Usually these can be like, like this. So we'll see. And now I just want to quickly check some of the monthly information. Oh, that's the quarterly. Yeah, 1 sec. Here. Okay. So, yeah, I think we're, yeah, I like copper up here. I do like copper a lot. So I'm going to carefully watch it, and we've got 20 seconds to go, guys. Yeah, it's a great fall profile. We've got 10 seconds. 5, 4, 3, 2, 1, announcement. Copper probably is just going to dump here. Probably not going to give us anything, but I'm going to wait. You see, it's a nice market to trade, right? Can you imagine trading the NASDAQ right now, or just all the, like, you know, God, some of the price action over there can just be nutty. Man, I'd love copper to get back up in here. Silver 22.94. No, we'll leave it on copper, but let's see if we can just get a push back up here. NASDAQ 17,650. So just keep an eye on everything here. $0. Yeah. Okay, here we go. Copper's trying to do something here. It's trying. What are you doing, Steve? Are you being aggressive or are you waiting for the answer? I think or waiting. Yeah, I think waiting is a good idea. Yeah, it's weird how that pink eye comes with the COVID, huh? It's just strange. We got silver at 22.97, gold 2017, euros putting on a little bit against the dollar, not much. Bonds, that's kind of the key one. What's the 10-year doing? All right, so 10 years trying to push higher here means right now the market liked the number. If the 10-year starts really pushing and rates are dropping, you know, we have to be a bit more careful about shorting copper, but let's just wait and see. This could just be a push up to resistance and then move back down. Let's see what the ultra bond is doing. I need to get a squawker, you know, the squawk thingy. I got to look into that because I do want the news more real time. So I'll have to see where I can get that. So durable goods came out 0% against 1.1. Yeah, so that's, I think, stock market positive. GDP came out 3.3. So that's, the forecast was 2, but the previous was 4.9. So I don't know. GDP looks kind of neutral to me. Durable goods looks, I think this is this number is looking like bonds will like it and rates might come down a little bit. Don't forget we got Lagarde in 15 minutes as well. So I think the market for now might like this number a little bit, which you know, we'll see if rates keep pushing higher. That will make me, if the euro right now is 109.11 against the dollar. So if I saw the euro, you know, push up while bonds are breaking out to the top side, you know, and stocks were pushing higher, I would just be a little less likely to you know, trade copper. That doesn't mean that copper won't go down. It's just what I'm looking for. I still might short copper. I'm just telling you guys how I'm looking at this. Let's flop back to copper. Silver's at 22.99. So silver's kind of up near our silver's. I'm gonna see what we got shaken for silver at. I'm gonna wait for the 9 o'clock hourly close, because if we close below 2304, see, because I'm also looking at just a lot of other key levels that, you know, I can see if different asset classes close above or below key levels that, you know, influences things a lot, influences the decision making process. So right now a super key level for silver is monthly VWAP is coming in at 2304 and a half. That's a very, very important level for silver. We will watch that level. That's going to determine That's going to determine right there this hourly close. I'm going to see where this wants to close. I still think copper will probably be under pressure. It's just on a little, I mean, we'll see. Well, we just got to see. I'm not married to any idea. But so far, we're not getting any place I'd want to short copper anyways. Blow my nose again, you guys. We've got Lagarde speaking here in, 10 minutes. So it's not going to be a dull day. We got Lagarde. Sorry, yeah, her press conference. That's going to be wild. And because I think our speech later at 10:15 will probably be, just prepared remarks. So the press conference with the ECB, that's like a Fed press conference. That's a big deal. That's in 9 minutes. There's going to be some major volatility during that period. And then we got the stock market open right after that. We got a lot of stuff today, you guys. NG still pushing down. Nice. That'd be great because NG might give the long here somewhere. I mean, if we got down to like 2.2 on NG, that'd be sweet. Anywhere down in here. 2.2 would just be like the awesome spot for NG. Don't know if we'll get there, but that'll be a great level. Crude here. Let's look at crude. Crude is pushing a little higher so far. Platinum. Yep. So platinum's got a lot of resistance up there in the 909. We'll just keep an eye on these. Silver at 04.5. We'll see how that reacts. Copper is still the one that's the most overextended. I do still, I like copper the most, especially because look at this. This is something I didn't notice. Look at that volume right there. And all that volume, we know from the volume profile, was put in right here. And it closed off the highs. So I think that means, something like that. So copper remains my, I like it. But NASDAQ's up now 17,700. So we're going to just keep an eye on the indices because, they like this number right here. Look, this yearly trend line is going to be there, right, Steve? So we might have another whack at 17,776 again today. We'll see. I think there are better markets to trade today. So you can see the NASDAQ. I mean, here we go. For those of you who like the NASDAQ, we think today is going to be choppy. So if we think today is going to be choppy, the daily resistance coming across here. What do we have here? Boom. What do we have here? Boom. So something to think about up there. I will be looking more at the metals. Let's just load the Dow. Because the Dow is good to watch too, because the Dow, those are the industrials, right? So that influences the copper. Well, Steve, is your brother going to stop by today? He should be able to comment. Yeah, so the Dow we got to start looking at because I've been a little bit, to be honest, I've missed a couple of trades this week. Like that crude oil one the other day I should have hit. But I have to admit, I am very tired. Just so I'm doing the best I can this week, and so far so good. Yeah, we got a lot of resistance up here on the Dow into this general area as well. But And the Dow looks to have quite a bit of support potentially here on the daily, so you could cycle back up here to 38,000, to I don't want to trade the Dow, but just want to kind of look at it for copper. Let's look at the 10-year. Exactly. It's not about the money you make. It's about the money you don't lose. For sure. Yeah, cool. Actually, we can stop by or you could watch the stream later because he already missed. Well, he can see what trades we put on. But I mean, if I was a new person, I would want to watch like the first 45 minutes of the stream where I'm analyzing and laying the foundation for what to expect for the day. So the 10 years kind of maybe running into some resistance up here. We'll just have to see. I mean, Lagarde's press conference is in a couple minutes. It's going to move stuff around pretty good. Let's look at the 30-year. Yeah, 30-year. We got a lot of resistance up here into this area here on the 30-year, 120, 120 even. A lot of resistance. But right now we're breaking the hourly resistance, so gotta respect that. On the ultra bond, same thing. You got quite a lot of resistance up here, but we're breaking the hourly for now. Gold is pushing. The market kind of liked this number so far, a little bit. Doesn't mean it's not going to reverse, just temporarily. Silver is holding here, so I think we'll see. But all things being equal, I think my top short for 9 will be silver potentially up here, depending where it closes. All right. Just give me a few minutes, Steve. I'm just going to go upstairs and ask my wife to put on a small thing of coffee for me, so I'll be right back. But Lagarde is coming on in a few minutes, so I'll be back. All right, we got Lagarde coming on in 5 seconds for a press conference. Silver. Go look at some copper as well. Copper's not really rallying yet. That's kind of why I like silver better, potentially, at 9 a.m. Let's see what Lagarde does to shake stuff up. I didn't get coffee. I got some cold pressed orange juice, kiwi, ginger, lime. It's kind of like, you know, really good for colds and stuff. So. Fish. All right, so we're waiting, you guys. Lagarde's press conference is right now. She's French, I think, right? She's like, we don't know about the interest rates. That's my wannabe French accent, you guys. That is why I'm not a paid comedian. So we'll see what she says. Maybe she can spice stuff up a bit. I got silver up on the screen right now. If we can hold right around here heading into the 9 a.m. hourly close, you know, I may have to short silver. A little risky just because the 4 hourly right now is kind of trying to trend up. But if the short on the hourly is correct and we nail it and it goes down, then that would mean this 4 hourly is going to head back down here. And that could be a nice move on silver. I think we might have to short silver if it stays, you know, up in here. Because it could be like this one. The one I missed on silver yesterday was here. You see? Same spot. You see the price 23.05 and you see how it closed 23.03. The reason for that is you got monthly VWAP right there. That's coming across right where we're at right now, you see? So I like to wait for the hour, but sometimes that means I miss it, right? Like silver might close down here, and even though it technically kind of makes it a better trade because it's showing you resistance is stronger, it's, for me, those are sometimes harder to take. I like taking them when they close near the high of the bar because then my risk is very well defined. Whereas if I short here, I still have to kind of accept the risk back to here. So we'll see. We'll take it as it comes. It was like yesterday on that NASDAQ trade here. You know, this is, see how that closed right up near the high? Those are the ones I like because I just know based on everything else, like that's kind of the area. If I short in here, my risk is very defined. Those are the trades I like. But again, I'm kind of overly picky sometimes. So let's keep an eye on silver. Keep an eye on, here's back to silver. Kind of my top pick for 9 a.m. so far, based on what I can see. But again, we're going to see what bonds are doing, what the dollar's doing. You know, we're going to look at all these things together. So Euro US dollar still stuck, you know, 109.13. Gold 2018. 10-year. See what Zero Hedge has to say about the news. You know, Zero Hedge is I used to have the premium. I gotta get that again because it really is. It's one of the few news subscriptions that actually, the premium especially, just great information. Just give me a moment while I look at the news here. We had jobless claims. So they bounced back to 1 month's highs. So if that, you know, then that would be bond positive, rates lower, stock positive. See, I think silver's in trouble either way, because like if the economy is good, people buy stocks, they're not really going to want too much silver. And if we're going into recession and, you know, that's because bonds are going down and rates are going higher, still nobody's going to want silver. So I think it's just not, I think it's going to get beat up a little bit more. ECB keeps rates unchanged, sees declining trend in inflation. Okay, so that's, you know, probably bullish stocks. Rates are on hold, but brace for collapse in April rate cut odds. Yeah. Interesting. Yeah. So got a little bit of a mixed bag today, but silver is looking like the one that we may want to short here in a few minutes. But see, it's, yeah, might be one of these that's, we'll see. Just kind of hoping we can just punch. This is good news. Our level of 23, 04 up here is so far appearing strong. These are the toughest ones. When it closes down here, like let's say this closed right here, right? The reason this is hard for me, as I just mentioned, even though I like this level and I'd want to short, look at how big this outside hourly bar is, right? You guys see that? Like, it's a big outside hourly bar, and sometimes these are just tough to trade, right? So if I make the decision to take this at 9 a.m., I'll either just set my order up here and dare it to go there and hit it, because then I can put my stop here. Or if I feel like I have to get in at market here and I do that, then I'm really looking just for this. My stop is still, if it starts to go against me at all, I just cut it. These are hard to take, and it's just what you got to deal with sometimes when you get these big outside bars. So that's silver, but let's see, it's kind of dropping now. Let's look at copper again. So let's do our hourly check here just to make sure we're not missing anything. I don't want to be married to silver, but I like silver. But let's look top to bottom. We got 9 minutes to go. So here's, because this will inform what's going on. So euro pushing higher. Looks like we're probably going to go for a run at yesterday's highs, maybe. I wouldn't be surprised. I mean, right now the hourly is trying to break that resistance. That news was kind of, bond positive, rates bearish. So maybe the euro will put on a little ground against the dollar. We'll see. It's still too early, but it looks like stocks may want to try and push back up in here today. Let's look at the NASDAQ, because this will inform, right, how we trade the other markets. The NASDAQ, you got a lot more resistance. I still wouldn't short this, even though you got a lot of resistance here for sure. But the reason I'm not, just aggressively shorting the NASDAQ is because the daily is still trending strongly to the upside, and you have to respect that until it's over. Yesterday was a different situation because we nailed the high of the day. But so right here, even though you technically have a lot of resistance here at 17,720, which probably has a good chance of holding price, I'm not going to short. I don't want to go against that daily trend run to the upside. So we got to be careful of the NASDAQ there. Let's go ahead and look at the 10-year is really going to determine what silver and copper are going to do here heading into the 9 o'clock hourly close. So looking at the 10-year here on the back of this news that just came out, and Lagarde is speaking now. I mean, it looks to me like the 10-year wants to try and push a little higher, meaning rates coming off a little bit, right? Which means that silver, although it could drop, it might not be as great of a short. We're going to have to see. The dollars, well, guys, you see, the dollar's getting strong against the euro right now. The euro futures was just at 1.0915, 1.0918 before Lagarde. We're at 1.092, right? So the dollar is smelling something here. There's a little bit of movement into the dollar right now. So if there's movement into the dollar right now, and rates for right now, bonds are heading up, right? So I think this could give us a little bit of confidence in silver shorting. Look, guys, if we get a close up in here in 5 minutes, I need to see where the hourly closes, because for me, if this hourly silver was to close up here at 2305 or 2306, I wouldn't take it, because it's not respecting the resistance level that I need it to respect, which is right here at 04.5. But if we get the close at 04.5, I mean under 04.5, and I still see, because the dollar is going to be the main driver for metals. So the fact that the euro now is, we're 108.94, guys. Yeah, I'm going to have to short silver. There's no question about it. So hopefully silver will close. Yeah, I don't even know if we're going to get the opportunity. I'm going to wait because I have to, but the dollar's getting real. Lagarde is saying something right now in her press conference, and the euro's taking a hit right now because we're below 109. We're 0896. So you see how silver's jumping around? So let's see. I got to be patient because, you know, with when she's speaking, guys, you know, this stuff can really jump around. That's why sometimes you just got to accept if you miss a trade, you miss a trade, right? But if the dollar stays down here below 109 and silver closes up here below 04, 04 and a half, I'm probably just going to have to short silver. So that's kind of what I'm looking at. $1.0897. You know, gold's at 2020. I'd like to see gold pull off a little bit. Look at still got 4 minutes, so. Are you already short silver? Nice. Dude, Steven, we're going to open a hedge fund, okay? I'm going to just do all the analysis. You just follow it and do your trading based on my analysis, okay? I'm totally good with that. Because you trade my analysis better than I do, which is awesome. That's great, buddy. I think you're in a good spot right now with what I'm seeing on the dollar. Here's gold. Yeah, I think I'm going to have to as well. Let's see where silver closes, but I think it's a pretty good dollar's at 0896. I'm going to look to short 02 right now on silver just to see. I've got an order to short 1 at 02. It's dangerous with Lagarde, but I can't, the pattern's too good. Ooh. All right, I'm short 02. My mental stop is 08-ish. Come on, baby, just drop. I'm short from 02. Let's just drop, baby. Dollars 0893, that's good. Come on, just a nice, quick, fast drop here. Just a quick snap down here to 84. Be very nice. I'll keep you posted. When she's speaking, I manage my trades a little differently because things can really move. I'm still short. We're gonna have to keep a close eye if we get down to 22.92 because that's last week's weekly VWAP. Hopefully we'll get down there. All right, we've got a minute and a half. Still, dollar still strong against the euro, so if we can get back into the 0880s would be nice. She's we're at 0896 now. I don't want to get back above 0890. See, she's I don't want to get back above 09. Sorry. You see, when she's speaking, man, this thing just it's for me. It's always nerve-wracking to put a trade on when the central bankers are speaking. I don't like it, but this one I just had to put. So let's just see if we can, you know, preparation, a little bit of luck. We get silver to collapse would be nice. $20. So we're short silver from 02. Hoping we can get a little bit of a collapse here, but euro's back to 0901. So you see, she's now we're 0903. It's really jumping around with Lagarde speaking, you guys. So we got to manage this carefully. 5 seconds to the close. Let's see if we can get a nice little drop. We're at 08.99 on the dollar. I'm going to manage this very carefully just because when she's speaking, you know, she can say anything. 0897. We got to get the euro dollar back into the 0880s. 0896 is good. Come on. 0891, good. Get back in the 80s. Oh, see? Look at that. Silver is volatile. Gold is at 2019. Look at silver bumping around, man. Whew. I do not like trading the central bankers. Come on, have the volatility go in our favor. So far, this 98 level's held a few times, so we got to break it. We need a quick little snap here. There we go. Snap, baby. 0889 snap. Yeah, mine too. Give it a little bit of a chance. We're at 0889, 0890. I'm gonna let it go a little bit. I'd like it to get down to 92, which is last week's VWAP. And the hourly envelope bottom is kind of like where I'm interested to watch. Trying, but it keeps getting hung up here at 98. Euro US is still 89, so that's good if we can. But I want to see silver get aggressively sold here. I don't like that it's stalling. Silver makes you sweat sometimes, you know, it'll do this jumping around a bit, and then oftentimes I just can't take it anymore, so I'll pull it off, and then boom, it'll just go. Especially with a central banker speaking, it can get real wacky. Come on, we're at 08, 88, 89 on the Euro US. Let's go silver, collapse. Trying, got to get through these lows here. Come on. Come on. Come on. Look at that. I got picked up again. I'm going on with 98 that I'm not liking so far. I'm still short, but man. We're 0888 on the dollar, so 0887. Ugh. Just watching. $08.86. I mean, $08.85. So with the dollar getting stronger, I mean, silver should be dropping here. On silver. $08.83. I mean, silver needs to collapse. The gold is not following. Gold's at 2021. I don't know why that is the case. $08.80. Come on, get into the 70s. Man. Why is silver fighting this? $08.79. I'm still short because the dollar is just strong right now. Silver should drop. Come on. Give up this 23 and let's see a collapse. See the longs give up. Let's see silver now catch down to the dollar. There you go. Go. Drop down to at least 92. My stop's in my head at 05. Just, where's one of these famous silver snaps to the downside? It's wrestling with the 4-hour envelope top and true average right there. That's why it's doing this. I'd like to get at least down to 92-ish. Come on. Needs to, there you go, crack that 4-hourly true average and just see a little snap down to 92. Come on. Man. For 08.81. Gold's pushing up now. This is, I don't know why silver's fighting this. I'm still short for now, but it's held now that 22.98 level just too many times. And the dollar is strong. So it's looking like if silver doesn't push down, it looks like the dollar is going to get weak and the euro is going to rebound here. And silver and gold could be leading the way. I'm still short, but I'm not liking it as much. Still short. Man, it's just testing you. And my shot clock is about to expire soon as well, Steve. Still short for now, but we just need a crack. I don't know why this is it's not behaving correctly. But I'm staying short for now. Dollars 08.79. Yeah, you're in a great spot because your BE is a little higher than mine. my BE is still too close to the market, so we're 0880. Silver's just this kind of market, man. It's one of these markets where it will make you sweat. Like it'll sweat you out of the position. So many times I've been in a silver position like this and I can't take it anymore and I close and then it just goes my way. So I'm still short now, but I really would like it to go soon. It'll make you uncomfortable. I mean, dollars at 0880. It just keeps holding that 98. $08.79. Come on, smash through 98. $08.78 on the dollar. Go. I'm closing it. Oh, I got 200 in profit out of that, but that was just painful. We'll see what happens. By all indications, it should be dropping, but it's held now that I'm trying to trade what I see. It's held that 22.98 level now on a good 5 or 6 attempts. And with the dollar getting weaker against the euro, and we're coming out of monthly VWAP, I still think it'll drop, but the fact that it's been stuck here for so long, I just took my 175. I mean 175 in that. So we'll see how it goes. This is a tough one to manage, but good trade. Guys, we put ourselves in a great position. These are the kind of trades, right? Like everything, we picked a good spot. Steve is probably still in his silver. He's got his stop at break even at 03, which is fine. But I took my profit there because it was just holding, you know, that 98 level too much. And now here you can see now silver's pushing higher. So Steve probably got out at BE, which I think is good and smart. But see, so this is a good demonstration of trade management, you guys. I was lucky enough to book 175 there. Obviously, I wanted a lot more because I thought that silver could and should collapse, right, based on the strong dollar. But as I'm watching the dollar get stronger against the euro, but gold is ticking up and silver kept holding there at the 98 level, that's why I cut it when I cut it. And, you know, look, I'm glad I did. Doesn't always work that way, but just trying to stay objective, you know, because when you're in a trade, I don't care what anybody says, there's money on the line, right? Like money's how we feed our families. It's how we live. So obviously emotions come up and you want that fucker to drop. And, you know, sometimes silver will just, if you get it right, it'll just drop and you'll make $1,000 just right on your lap. It's a great feeling, right? Obviously I wanted that to happen, but when it's not happening and it's just getting hung up at that damn, you know, 98 level, you know, I'm trying to trade what I see. That doesn't mean it, you know, maybe what they just did is do a little stop run and now maybe it'll collapse. That's possible, but these are not the ones that I like to sit around and, you know, wait for to find out. Again, I like the lowest hanging fruit. They start going my way and they're kind of comfortable trades the whole way. So that was, you know, that was all right. I'm guessing it was to each their own there on that one. I got 175 out of it. Steve probably broke even, which is good. Hopefully they didn't slip you a half cent or a cent. Let me know how they do that slippage on those challenge accounts, because they can set those accounts to play games, especially on, you know, just market entries, exits, stops. You know, you slip somebody, you know, a half a cent here, a cent here. I'm talking about silver, but, you know, it adds up over time. All right, so that's a good trade. Good trade to start the day on silver. Put ourselves in a decent position. Lagarde is speaking, you guys. So when she speaks, you know, it just it's jumping around a lot more. So let's go ahead. We got the stock market opening in 15 minutes. Let's prepare our notes for the NASDAQ. See if we've got anything shaken, if we're going to take anything. Again, we're navigating the seas of volatility so far. Nice, consistent, you know, taking our spots when they set up. So far, just to recap you guys, the NASDAQ is pushing higher, probably going to go back. I don't know if we're going to make it all the way back to yesterday's highs. We'll see. I'm still calling for a choppy day in the stock market. It's going to depend on what the bond market, all this stuff does. The numbers came out a little bit, you know, bullish for stocks, hawkish for bonds, bearish for rates. And funny enough, the dollar's been kind of all over the place. The dollar's 1.0885. We were down in the 70s. It couldn't hold. Silver still might go down. You know, I really don't know, but I didn't want to sit around and find out. So question is for the NASDAQ here. Well, bonds will tell, because look, we're going to open here on the NASDAQ, depending if we open here. Nice extension, nice pattern. We certainly have some resistance here on the NASDAQ for the open. Let's see what the 10-year is doing. So the 10-year, yeah, for now, this is another thing too. You can see the hourly here. This is what I called when we saw this closing above all that resistance there. You know, 10 years right now looking, you know, look at the volatility. Speaking of volatility, guys, this is the most liquid government bond market in the world. Look at the volatility here on the daily chart for the 10-year Treasury note, right? Woo. So this, I mean, if we start getting much above this 111.10 level, means rates could come down today, and that could keep metals up here. That could, you know, add a nice floor to the stock market. Not that I'm going to get long up here, but just got to be careful because this is going to influence our trading decisions. So heading into the open, we can see that, you know, stocks right now are at a key resistance level, but the 10-year Treasury note is breaking its own resistance level. Rates are coming off. The dollar, see, I want to point this out right now with Lagarde. I don't know if she's still speaking or not, but we've got a very mixed bag because you got bonds heading higher and rates are dropping, right? But you got the dollar getting stronger against the euro. It's 108.79 right now, right? So what you want to see, the ripe environment, why I took that profit on silver for a couple $100, you know, was not because I didn't want to make a grand and have a quick snap on silver. Of course I did. But, you know, you want that silver short. You want to be holding that silver short when bonds are going down and rates are increasing and the dollar's getting stronger. That's what you want. Right now we got mixed bag. Dollar's getting stronger, but bonds are pushing higher, which is driving rates down. So silver, gold, they're kind of stuck in that, you know, current between the two. So with that said, there's still a ton of resistance here for silver at the 23 level. I think stocks are going to be very, very volatile at the open. If you didn't get a chance to see my pre-market setup at the beginning of this video, rewind it, watch it. It'll probably save you a lot of money from making stupid trades today. You know, we're at these all-time highs. This is where the volatility and the range expansion is the most. Sure, it's good if we're going to just keep sailing on to higher and higher highs. The bond market is not suggesting that that's going to happen. So be careful at the open today. That's my advice to those of you trading the NASDAQ at the open with the volatility. Well, I think I might want to watch silver at the open because things can change very fast. So here's the NASDAQ. It's going to be interesting. I don't see, you know, some days we'll take the trade at the open for the stock market. But on a day like today with what the scoreboard's doing, no thank you. It's not about the money you make. It's about the money you don't lose. If you don't lose a lot of money by taking stupid trades, then the ones you take that are good, you know, you got the edge, you win 60%, you lose 40, but you make 2 to 1, 3 to 1. Those add up and your balance goes like this. If you just can stay out of those 50-50 trades, because there's, you know, thousands of decent trades all day, every day. And that's how people suck at trading and go broke, because they take those decent trades and don't wait for the good ones. So I'm saying that because today at the open, you know, we took that NASDAQ opening trade 2 days ago. Some days they just look great. The scoreboard looks good. Everything looks good. You want to take it. Today's not one of those days. You know, I think it's going to be very volatile on the stocks today, especially what we're seeing for the scoreboard. So be careful trading the indices today. I'm in favor still of shorting metals. especially with a strong dollar, but we're going to have to see bonds come down a little and rates tick back up to really keep that metals short opportunity at the forefront. So keep an eye on that. Crude, natural gas, we're waiting to maybe get long on some pullbacks, but we got to keep an eye on that. I think stocks, bonds, a lot of volatility today. Metals, I think the lowest hanging fruit potentially is metals, especially silver, copper, platinum potentially. Oh, and I mean, guys, Euro US dollar, the future is at 108.83. So we're stabilizing down there. Dollar strength against the euro, but we're not getting cooperation from the bonds yet. Let's look at the ultra bond. So I was looking at the 10-year. So this is kind of the make or break spot here. So this is good, guys. You see, this is the ultra bond here. This is the 4-hour chart. So if that high is in there at 126, you know, flat for the ultras, see the hourly here broke resistance at about 125.25. So we're kind of stuck in that 7-tick range on the ultras, right? But if that 4-hourly and daily here, this daily resistance, if daily resistance and 4-hourly resistance can push down on the hourly, then I think, you know, the metals should follow to the downside. You know, gold's back now. Gold did spike up to 2024. Silver's back to 22.99. So it's really going to just, the bond market is going to control what metals do today. We've got cooperation from the dollar right now. So let's go ahead and take a look at all the metals heading into the open. Because I think if there's going to be a play at the open, it would be more the metals than the actual indices. Because, you know, these will move around a lot with, you know, the rebalancing coming into the ETFs, GLD, SLV, PSLV. So they do move. So gold, you can see, yeah, I mean, gold's kind of like bonds. You're getting some mixed signals because you've got some resistance here, but you've also got a ton of temporary support here. So that's why you're seeing this price action. Let's look at silver. Oh, I was wondering, there's like a loud noise. It sounds like a lawnmower. The neighbor revving up his car. Kids. Okay, so silver is coming down. Okay. I have a feeling silver's gonna, if bonds can stabilize, silver will probably drop here with that dollar. Well, dollar's back at 108.85. So let's keep an eye on but guys, and this is what I want to point out too. Don't ever beat yourself up. Like trading, you know, it's not easy. You have to make decisions, live with your decisions, move on to the next one. And if it was easy, everybody'd be doing it, right? And especially when these central bankers like Lagarde are opening up their pie holes, it moves the market a lot. You get a lot of irrational gyrations, and the correlations kind of, you know, because you got to realize there's a lot of arbitrage systems that are hedging all these correlations, right? So when the central banker is speaking and the markets are liquid, the correlations are jumping around a lot, right? It's like the robot dance, right? So got to be careful when those central bankers are speaking. And right now, the motto of this channel and the motto for the channel will remain, it's not about the money you make, it's about the money you don't lose. Take care of your risk. The reward will take care of itself as long as you have a system with an edge and follow it, you know? Oh my God, we're not making millions like all the other channels. Nope, we're not the ballers. We're not driving the Lambos. Sorry guys, no renting of Lamborghinis here. Only real trading. All right. Let's look at copper, because copper I still like. Yeah, so copper is not really giving me, kind of stuck there on copper. Let's look at platinum. Platinum, you've got some pretty nice resistance here as well. But I think the platinum and silver will be correlated. So if I had to pick one, it'd probably be silver, but it really depends, you know, what bonds do. Right now, the euro's back into still dollar strong. I just kind of feel like, I mean, it's a lot of resistance up. But that 4 hourly, you got to realize too, see, we're shorting against a 4 hourly that we don't know if this is going to try and trend higher or reverse. I still think it's going to reverse, but I'm flat silver, not in a position, not in a rush. Right now I can feel it's good to just kind of take a breather, let the market, you know, let's let it get settled here at the open. That'll we'll see how the scoreboard reacts. That'll inform our decision for the 10 a.m. hourly close. You know, I think that's the prudent thing right now. That's what I'm going to do. And the stock market's going to open here in about 3.5 minutes. So let's go ahead and just quickly take a look at ES, E-mini S&P 500 futures. Got to load it here. All right. Yeah, it's going to be, I think ES looks like it probably is going to squeeze back up toward those highs. I still, you know, it's going to be a lot of volatility up near these highs. I think the daily trend run is running out of some gas up here now. At least that's what the bond market is telling us for now. Looking at the NASDAQ for the open. You got to always ask yourself heading into the open. You got to say, okay, you know, what can the market makers do to piss people off? Where's the pain trade? Where are the most people in pain? Well, in this case, I would say probably, again, if you look at yesterday, even though we had a great short yesterday, you know, we don't hold overnight. But probably a lot of people held their shorts overnight because, you know, they thought that was the top and now they're getting squeezed. So it wouldn't be surprising for me to for them to want to drive this market higher and run some stops up in there. So I think, you know, I wouldn't buy this here at all, and I'm not going to sell it, but I'm always curious to see. You know, usually we pick pretty good levels here at the open, because sometimes what I'll do is say, okay, well, if I think they're probably going to run it back toward those highs on a day where I'm clear on the scoreboard, then I can sometimes, you know, set an order to pick off a trade at the open. But today I'm not going to do that. All right, we got 2 minutes. So Steve, how you doing? Did you get out at break even on that silver? This is a key level for silver. You got the monthly VWAP here. I mean, yeah, this is silver. I'm going to leave silver alone for right now. I'm just not digging it. Let's go ahead and watch. Let's watch ES today. Actually, that's the funny thing is when my computer gets really overheated is usually at the open with the NASDAQ, and I think it has to do because it's crunching volume profile information for monthly, weekly, daily, hourly volume profile stuff for the NASDAQ, you know, and it's like, so I think that's why my thing gets overheated at the open. So I'm not, unless I see something amazing, I have to trade on the NASDAQ at the open. We'll watch the ES and just trade it so my computer stays. I think we definitely got a bullish situation here with ES. It's looking a little more bullish than the NASDAQ for now. You got a lot of support now into, you know, 49.04, anywhere down there. Because look at the hourly, you know, you really cleared all this resistance nicely. So you got the crossover down here. So 49.04. So I'm probably not going to trade ES at the open, but I will at least, you know, keep an eye on it. Just in case, you know, sometimes it just delivers a gift. I do think it's bullish here at the open. You know, because we're clearing the 4 hourly extension. Hourly broke its extension. Silver doesn't want to drop, not yet. Bonds are being bid, rates coming down. So not doing anything, but just going to keep an eye. Yeah, silver has more slippage, exactly. That's the danger about about silver, especially on those demo accounts they've got you on them. They're probably going to, you know, slip you more. It's just the way they do it. You know, trading, you got to have a very defined edge, right? So they don't have to throw people's edge off by a whole lot to really mess things up. All right, so here's ES. I'm looking, I want to see if price pulls back down into the 49.04 level and I see it stabilizing, you know. We'll see. I'm not nuts about any trade right now, but the market does look to have a lot of support at about 49.04-ish. Let's keep an eye on the bond market. Now silver's back to 22.97. Okay, that's good. That's a break even, Steve. You lost 62 bucks on silver because you could have made $1,000. So that's good risk reward. And now silver is dropping. It's at 22.97, but that 22.98 level, look, the scoreboard is not giving a clear picture today, you guys. We got to wait until bonds. We got to figure out, this is what we need to figure out. We got to figure out if the dollar wants to give back some to the euro and, you know, catch up to bonds and the lower rates, or do bonds want to reverse their gains after Lagarde, rates kick back up and join the strong dollar? That's going to determine the trajectory for metals in the stock market today. So, you know, all we have to do is wait for that clarification from those assets, and then we know the low-hanging fruit to play. And that's how we do it. So if we look at the 10-year now, you know, this is the key level. So you can see here, this is the level we've been watching on the 10-year. So if we're going to hold here into 111.10 on the 10-year and reverse that pump up after Lagarde, and bonds start to drop and rates start to rise and the dollar stays strong against the euro, you know, then we're going to have some great shorts on the metals. And that's what we got to look for. So now silver is cracking through that 98 level. So I kind of thought that would happen, but it's dangerous when, you know, I don't really regret it. But here goes silver. This is the trade we're looking at. You know, gold still at 2020. Yeah, dollars 08.77. So I think let's look at copper, because copper's heading south. Platinum. Yeah, so now we do have that confirmation. I think that bonds want to catch down and rates want to get higher while the dollar is getting stronger. That should be a good recipe for weakness in the metals. I might set an order to reshort silver here if I get lucky on a pop-up. I'm going to try and reshort my silver at 23.02. Got an order there. We'll see if it turns out to be a mistake or not, but the dollar is still kind of so far hanging on to gains, and the 10-year did get rejected. We are at monthly VWAP for silver up here, so I got the order at 02. You know, sometimes silver will go up and kiss it and drop, and we'll see. Gold's at 2021. Platinum and copper were trying to drop last we looked. 10-year is at 5.5. Here's the 10-year. I'm liking what I'm seeing on the 10-year so far. All other things being equal, but that's why I'm trying to reshort silver with the strong dollar. So we'll see. My order to short silver is at 02. And, you know, the stop, mental stop, is kind of up there, 05. I'm basically just risking those gains that I got on that first short, trying to reopen it. And it may turn out to bite me in the butt, but we'll see. We're going to find out soon. Dollars 08.84. Okay, now the 10-year, I'm short. I want to see an immediate reaction down. I'm filled. But this thing needs to drop or I'm going to get out. Because the 10-year is back to 7 now. This is a volatile day. I'm short from 02. Stop is at 05.5. What's that high up there? 06. Okay. Put the stop at 06. I'm risking 4 cents out what I made on the first trade. It's a dangerous trade. But the dollar is strong, and bonds at least hit some resistance. So being at this monthly VWAP here, I got to try it. I'm short from 02. If it could drop, I mean, it's just not dropping. And I'm taking off here at 99.5. I made a little bit more. I'm up 300 on silver. So, you know, I'm just doing one contract. I'm happy. It's just not the, I think silver could drop here, but that 98 level is being very, very stubborn right now. And the market's just, it's market is waiting to see what bonds want to do here. This is what we're waiting on. And the trades you want are when you've got clarity from the scoreboard. Like, let's say we get ultimate clarity, bonds just start collapsing, rates rising, dollars getting stronger, and you see a good pattern on silver, and it's still just sitting there. When you hit that short, and it starts dropping fast, you know, you've hit it in the right spot. Those are the ones I like. So I'm happy I got out of that, made another few cents. So what is that? Up 300 on one contract on silver. It's better than getting poked in the eye with a sharp stick on a rather lackluster day so far, but managing it well. So I'm no orders, no nothing in silver, flat across the board. Let's go back to the bonds here. This is the problem, you guys, and this is what I just went over. And you know, I'm not like, the reason I repeat this stuff is not because I like talking. It's because I have to remind myself there's so many things to keep track of, right? That I got to remind myself, wait, why? Like, what the hell's going on? Yeah, what's going on is, look at the ultra bonds here, right? This is what I just went over. I'm going to go over it again. You got daily resistance. So here's your daily chart to the far left. You got a lot of resistance here on the daily, a lot. Is it going to hold or not? We don't know yet, but you got a lot of resistance. My mentor always said, resistance is resistance until broken. And he would just repeat that again. And we were all like, what are you talking about? He's like, resistance is resistance until broken. That was like his thing. And support, obviously the same. But basically, there's a resistance level, and it's freaking resistance until it's not. Right now, we've got 4 hourly resistance, daily resistance, but the hourly is bullish temporarily. And you've got a ton. You see this range that we were in here on the hourly? Look at the ultra bond here, right? You see that range we were in for several hours? On the back of Lagarde, we blasted out of the range, and now that old resistance level of the range is now support, right? We're stuck between strong, let's call it, you know, lower time period, hourly support pushing up, but it's meeting 4 hourly and daily resistance. Now, you would think that the daily resistance and the 4 hourly resistance are going to win that battle, but we don't know yet, right? So this is why metals are searching for, you know, the direction to go. And look, silver is 2306.5. So we've broken through VWAP, the monthly VWAP, you guys, on silver, right? We broke up and through that. Silver's probably going to run a little bit now to the upside. I'm not taking it long at all, but it's tipping us off to the fact that bonds might be running to the upside, rates coming down. If we see the euro start to rebound against the dollar, now we've got a clear picture. We can long crude, we can long natural gas, we can even long the stock market if we stay in a range all day and we see the scoreboard stay intact, we can play the long side on stock. So this is the type of clarity. We just wait for a market to tip us off. Right now, silver is tipping us off if it can stay above this 04.5 level. Right now it's back, it's 03, but if we hit, the fact that we hit 06 on silver just a second ago, I'll bring up silver again. See, isn't this fun? This is where I get excited about this stuff. So people who start trading for the money, if you trade, we get into trading to make money in the beginning. That's true. But if you don't end up really loving it and just really just eating, sleeping, and breathing it, you're probably not going to make money, because you got to love this stuff to like do it every day and put in the amount of time required to get good at it and be consistent with it. I mean, I love this, you know, like just looking at all this stuff. It's like people that play video games. I'm like, dude, this is the best video game ever. And as we, you know, get better and better at it, we can get paid better and better for it. It's just awesome. Yeah, market detectives. Nice emoji, Steve. That's exactly what we're doing. We're like, all right. So silver, guys, look. This is silver. Monthly VWAP. So that has held price. One. Do you see how it reacted to monthly VWAP yesterday? That's the move I was looking for today. That's why I put myself in that position twice. I was like, man, if this thing breaks, I'm going to punch myself that I wasn't short. But now, I mean, I pretty much, you know, I got lucky in a way in that, not lucky, you know, what do they say? Luck is where hard work and timing meet each other or something. It's that. It's intuition. It's reading the charts. I was short that second time and that first time. And when I could see that 98 level holding, I thought, something's not right here. Monthly VWAP is not exerting the downward force on silver that it should be. So happy that I got out of that. But now the question is, what is going on with bonds? So Steve, everything making sense to you? We're navigating the day nicely. Happy about that. All right, so here's ES. Look, you see the stock market open. This is why I didn't want to do anything today, because I thought it would just be choppy and, you know, crappy, and a good chance to just sit in a trade and lose money. So that was a good call. Not doing anything on the ES. So let's look the NASDAQ. See, Steve, now my computer's fine. So it's just the NASDAQ and the volume profile information at the open. So good to know. So here's NASDAQ. Yeah, it's responding to that resistance there. So, not clear. Silver back to 23 now. I mean, silver is all over the map. I think, you know, we're just going to have to wait for the 10 a.m. close, and, you know, that'll tell us if, you know, if bonds are going to sneak back down and rates are going to stay elevated or not. That's going to determine the trajectory of the day. And I like to trade once I have information, or at least as much information as I can have on what I think the trajectory of the day will be for rates, the dollar, everything. And guys, these narratives too, it's not like right now we're paying, you know, close attention to what's going on with the rates, the dollar, because that's the cycle we're in right now with the Fed. The big thing driving everything right now is, are they going to start easing in March or not, right? So, you know, at some point in the future, there'll be a different narrative, right? These narratives are constantly shifting, that are changing the weight of how, you know, how you read the different aspects of the intermarket correlations. And you kind of just get used to that over time. But that's why, you know, using OMA and the intermarket correlations, you can, you know, kind of trade your way through all market conditions, because you're not like, it's not like a, well, if this, then always this. Well, I mean, that's a good way. Sure, you can have systems that do that, and they'll have periods of time where they make money, but then you have months on end where you're not making any money. I mean, that's not fun. So that's why we do it this way. So let's see, gold 2023, silver 2304. These markets are confused right now. And the good news is, when we're reading it like this, we know the markets are confused and we're just waiting. You know, platinum here. So platinum, talked about shorting platinum today. It's, you know, kind of dropping nicely. I don't regret taking the silver short, making a little on that, because up near that monthly VWAP, you got to give silver a chance up there, you know? So we gave silver a good chance up there. See, look, guys, silver's back to 2306. And I know I keep harping on it, but if I bring up silver here, if it clears this 2304 level, we're going back to probably to the monthly point of control. Here's silver. Monthly point of control is back up here at 2318. Here's monthly VWAP. So this is either VWAP's going to hold and we're going to get smacked But the only way that's going to happen is if bonds pull off the highs, rates kick back up, and the dollar keeps the strength against the euro. If that doesn't happen, it's a temporary bout of risk on. Bonds will break resistance. The dollar will ease off against the euro. Silver will lead the way higher, and then we can look for stocks alongside potential. But only on pullbacks, because I think stocks will be very choppy today. Let's look at ES for all the ES aficionados. I'm not an ES aficionado. I'm a cigar aficionado. I like my cigars. Yeah. So a choppy day so far for stocks. Let's see what the next news. So far, kind of a nothing burger on the back of durable goods, GDP growth, Lagarde. We do have natural gas stocks coming out at 10:30. We are looking for a potential long on natural gas, so we'll keep an eye on that. Right, we had jobless claims as well at 8:30. We had look. Okay, so guys, we got new home sales at 10. Good, we got some more volatility. ECB Lagarde is doing a speech. So she just had a press conference. That wasn't enough for her. So now she's got to keep speaking as if we actually want to hear her. And then we've got natural gas stocks at 10:30. As you guys can hear, I'm not a huge fan of central bankers, but that's just me. I like to make fun of them. Okay. So heading into 10 a.m., new home sales, that could rock some stuff. And we'll see if we've got any good patterns across our charts. And we just need the correlations to kind of, you know, fall into place here. And the key to the puzzle for today are the bonds. Because it's different days, right? Some days you'll see metals, you know, leading bonds lower. Some days you'll see, you know, it just depends on what you're seeing in that moment. So look at this. The euro futures are back into the 70s. So the dollar is, look at the euro here. This is the dollar's tipping us off. Right here, guys. This is the euro futures. Look at this. So if we're headed back down to these lows at 108.60 today, which I think we might be, metals are not going to like that at all, right? So this is informing our decision-making process. But we could get a little bit of help if bonds would just back the F off and rates could kick up a little bit. That could make the picking for metals to the downside very nice, the lowest hanging fruit. Let's look at gold. Gold doesn't know what to do here. I mean, look at this. This is why I don't like gold. I mean, I like gold, but I very rarely trade it. Just in the history of trading gold, usually if there's a gold trade setting up, there's other trades that I like better, so I take those. All right. Let's look at silver. Man, silver's just... Okay, so it retested those highs and held. Gosh, it's like, am I going to have to short silver again? Dollar's at 08.76. Man, it's tempting. But I got to wait. The fact that it couldn't hold up there so far above monthly VWAP is very interesting. Dollars, I'm not putting on another trade. I just can't because this thing is just too, I gotta wait for clarity, but fascinating. We do have platinum. These can diverge though, silver and platinum sometimes, so don't make too much of this, but platinum is dropping. I think it's going to be on its way down here to 896. I think the euro is on its way down to that old low we looked at. Copper is going to be under pressure here. So if copper can get a spike as well. Okay, yeah, so copper might be one. We're going to get a 4-hourly close here. Let's go over the 4-hourlies, guys. This will be really important because these are all going to close. So let's lay the land here for the 4-hourly close coming up at 10 a.m. because this is a big deal. It'll inform our decision. So on ES, if this thing closes, you know, right in here, look out. Look at the NASDAQ. Now you say, oh, because that's a good short pattern on ES and NQ. So I certainly wouldn't want to be long here and say, well, then why don't we go short? Because I'm not shorting right now against that strong daily trend run unless I think I've got the high of the day like we did yesterday. That was the only reason I shorted up there yesterday near the high of the day, because I was pretty sure based on that yearly trend line that that's where we were. That's why I'm not going to short here in the middle of the range, even though that could be a strong resistance pattern on the NASDAQ. So if you're long, you know, be careful. Let's look at the Dow here, because this will inform if we want to trade copper. We need to understand what's going on with the Dow. The 4-hourly Dow here, I mean, you got a lot of resistance up in here. I don't like that outside bar, but you got a lot of resistance up in there. You got the weekly VWAP up there as well. So that could be setting up a decent short for copper. We'll see. Or silver. You know, we think of silver as a precious metal, but of course it's very industrial with solar cells and everything, so it'll follow the Dow as well. So yeah, bonds also a lot of resistance if that 4-hour holds. Yeah. Look at crude. Oh, here, let's look at gold. We'll look at the 4-hour chart for gold. I mean, look at this big outside bar on the 4-hourly chart. You guys want to lose money, just go trade a bunch of outside bars. See, because this here, you just don't know. See, it's weird right now, right? Because look, you have gold pushing higher here, and you have the euro dollar pushing lower, right? They're diverging. Which one is going to win? Bonds are going to tell us, and we don't know that answer yet. The silver still at 2303, but let's look at the 4-hour here. You see, this is, I mean, this is a pretty bullish 4-hour chart here on silver, you know? It really is. We're trending up. The monthly VWAP and the strong hourly resistance couldn't knock us down. Doesn't mean we won't drop. It just means that, you know, I don't want to take a chance being short. This thing could go higher. Silver, I don't want to short against that 4-hourly there on silver, because if that was an exhaust on silver here, guys, look at this. This is why we shorted it, and thankfully made a few $100, which was nice. But see, I was betting on this being resistance, being an exhaust on the 4-hourly chart, reversing back to the downside. Well, if that was going to happen, then that hourly should have already knocked us down. The fact that that didn't happen, it's just too bullish to short against. So let's just not step on that landmine. Copper, I want to short copper today. You guys know that. We've got a lot of resistance up here on copper, but right now, you know, the fact that that 4-hourly exhaust didn't knock us back down, copper may want to fish up a little higher. I'm not saying it's going to. I'm just saying when I look at this right here, you know, we're pressing up against these highs of the days. The fact that that exhaust couldn't respect the high of the day yet, you know, I'm not nuts about shorting copper here, especially if this hourly chart closes above that near high. But right now, I'm just happily staying out of potentially hazardous trades, waiting for something to look really good. So here's platinum. 4-hour on platinum is not really clear, but obviously heading lower. But, you know, we'll see what happens to the rest of the metals. Let's look at crude oil. Crude pushing higher. Quite bullish. We get nat gas. Are we having fun yet? I'm having fun. All right, nat, we're getting a pullback, which is nice. But I'd want to pull back even more on nat gas. I don't like this area here. It might hold, it might not, but I'm more interested in like the 2.2 level. Let's look at the euro US dollar for the 4-hour chart. Look at this. I mean, it's strong dollar. Gonna come down to bonds. Look at silver. The lid just lifted. We're 23.13, 20. It just sprang. We made a great call there. Using the scoreboard, using OMA. Man, I love when that happens. When you're so tempted to take a trade, but you're just reading it correctly and you don't step in this shit. Man, I'm pumped about that. That is awesome. So pumped about that. So where are we going? We're going to the monthly point of control. Look at this. Here's silver. Our, I mean, this could just be setting up a short higher. I'm gonna keep an eye on this because the 4 hourly. Look at this 2-bar pump. I'm gonna have to keep an eye. We're at the monthly point of control up here. Dollar's getting stronger. Okay, I'm gonna keep an eye on silver. Funny enough, because you got the monthly point of control here at 23.20. The hourly might be exhausting up into that level, taking out yesterday's high. The 4 hourly does have a lot of resistance up here potentially. I'd like us to squeeze up to 23.20 though in the next 5 minutes, close on those highs. Let's keep an eye on silver. And then I'll have to go and get some juice. Steve, how you doing today? You doing all right? Navigating the waters? Yes. Yeah, there's fireworks in the metals for sure. But it's going to come down to what bonds do. And right now, the hourly is trying to break out here on ultra bonds. 4 hourly, yeah, you could have a resistance there, but there's something I don't like about this. It looks like a trappy day to me today, Steve. Trappy day. There are days that are better and easier, and on trappy days, it's just good to take, if you can walk away from a day like this and just be up or flat, like that's a great day. Because it just looks trappy to me. I'm not liking what I'm seeing here. I think we'll see what happens, but based on that 4 hourly chart right there, copper might collapse from here. It might, but I don't see what I need to see to go short copper, so I'm not shorting copper. If the dollar stays down around 0.880 against the euro, and the silver can get a little spike up into the 23.20s here heading into the hourly close, I'll be open to shorting it, but I'm exercising a lot of caution here because look at this daily chart here right now on silver. I mean, we're kind of at the limit in terms of how high we're getting above yesterday's high. But right now, somebody is wrong. Either the dollar's wrong or, gold and silver are wrong. And we're going to find out. Bonds are going to give us the answer, but we don't have that answer yet. So hopefully bonds will start to fucking tank. Sorry, I don't mean to swear, but sometimes we got to swear. Hopefully bonds will tank. Rates will jack up. And then we get it. That's when you want to see silver way up here and go, what are you doing up there? Bang. And we got natural. Oh, so we got, right. Guys, so much news today. We got new home sales or pending home sales. Let's see. What is it? It's new home sales at 10. So 2 minutes, guys. New home sales. I'm going to keep an eye on silver here. No positions, no nothing. I'm just up 300 on the day from a couple of silver shorts that I happened to take off at a good spot. Other than that, just waiting for clarity. And the chat is open, so anybody can ask questions anytime. It's really funny. My daughter saw me on TV because, there's a YouTube thing open, and she goes to mom. She goes, "Daddy's on TV." And she goes, "Why does he look so angry?" He's like, "No, he's just working." And then I started laughing. She goes, "Oh, Daddy's happy now." All right, so there's the close. There's new home sales. Yes. I mean, I'm not going to short this, but let's just keep an eye on stuff because we didn't quite get the exhaust up there. It could drop, but it might not. All right, let's take a look now. New home sales. Let's look at ES. No pattern there. Let's look at NQ. Nothing there. Messy day so far. Look at 10-year. Yeah, this is going to really be the determining factor, because the 10-year, I mean, this could either be an exhaust, which right now it's kind of looking like that to me. But let's see. I'm not convinced yet. I really don't know what the 10-year is going to do. It's going to have to tell us first, because it's an outside bar. Those are just difficult. Yeah, tight stops. But that's the thing too, just because you're using tight stops, right? You don't want to just, you know, go in on, you know, because you can get nickel and dime to death, right? Like 5 tight stops. Suddenly you look back at the day and like, man, I lost $500 today, and like, they were all just kind of not great trades, you know? So I'm just going to be, but you're right. Generally speaking, yeah, tight stops. I mean, I always use tight stops, you know? I mean, I don't use stops, but you know what I mean? Like if it doesn't kind of start going my way, like I don't have a problem just cutting it and reevaluating. You can always get back in. People don't realize that. Like you don't have to be married to a position. Look at the ultra bonds. Yeah, the inventories will be nice. That'll be fun. I mean, if this dollar can stay strong, metals should catch down at some point. Man, I'm telling you, gold is just the monthly and the quarterly on gold. I think we're going to probably go down to all these at 1960. Not today, but you know, the next couple of weeks maybe, which would be great. There's silver. Gonna let it develop a little bit. Copper. I see copper might go down, but I'm not shorting here against this. It's like if I was gonna short, copper's overextended. I mean, I wanted to short it starting the day, but I'm just looking at this going, how could that 4-hour exhaust through the highs not knock us lower than that? And why are we closing there? Sure, we might still go down, but it's just not a good setup, so why mess with it? Platinum, let's take a look at platinum. Platinum dropping nicely. Crude, we're, you know, waiting for a pullback. Here's crude. Nat gas inventories out at 1030. And yeah, I think we'll see if nat gas can punch down into 2.2 maybe, but you gotta be careful trading nat gas. We'll see if it's down around 2.2. Maybe trade the inventories. Yeah, dollars 08.77 now, so I think silver's heading down from here, but I can't short it yet. It's tempting, it really is, but that daily is just, that's a little too. I think we're gonna go down though, because the dollar's just hanging on to gains. They might have just ripped it up and threw monthly VWAP to suck in some eager longs. That's the most important thing, is just learning to recognize traps. You know, you can recognize the traps, the rest kind of takes care of itself. All right, let's. I haven't taken a break yet. I need to get away from the screen for a few minutes. Let's take a break. Let's take 15. We'll come back ready for inventories. We'll take a look, see if anything sets up. But so far, I'm very happy with where we're at today. I'm up a few hundred, no big deal. I think Steve is, you know, break even or down $60 or something, but we're navigating it well. And under the circumstances, I'm very happy with that so far. So I will be back in 15, guys. I'll take a break. All right, back. What did I miss? Did we get rich while I was away? So here we are. Let's see. This may seem boring to some because you're not in a trade, but this, yeah, exactly. Yeah, exactly. This channel is first and foremost about making money and trading like a professional trader, trades in order to get consistent results. So the other channels that people see out there, those are entertainment channels, and you know, that's great if that's what you want. This channel and OMA is more for people who actually want to, you know, have life-changing experiences and, you know, learn how to trade, learn how to analyze the markets, learn how to make money, and, you know, ultimately not have to work whatever job they're working and all that kind of stuff. So, you know, and that takes a degree of effort. Just like, you know, you got your MBA, that took effort. I've got my, you know, 2 master's degrees that took effort, and trading takes effort. So everybody wants, you know, something handed to them on a, I suppose that's why the influencers make so much money, because they make the promise of easy results. And that's, you know, probably somewhere deep down, people know that it's bullshit, but they just can't help themselves. Like, really? Okay, I really can. Subconsciously, they're kind of convincing themselves, maybe I can, you know, get rich and just don't have to do anything. The influencers are selling that dream, you know? Wow, dollar very strong, 0861. I don't see how silver is not going to be catching down. Exactly. It's Owings Market Analysis, not Owings Ballers Incorporated. Yeah, but that's good. That's the kind of group we want, you know. Probably, you know, within the next 6 months, we'll probably have like 100 people in our elite member area, and there'll be quality people who, you know, we can really discuss, you know, everything, and it'll be like a mini little hedge fund environment. It'll be awesome. I'm excited about that. All right, so it's just really interesting here that you have the dollar getting really strong against the euro. We're at 0863, and silver so far is holding up, but I think this is going to dump. I'm just hesitant. I can't short this right now. I think it is going to dump. I just can't short with monthly VWAP, you know, right underneath us. I just can't. Because that's like, okay, well, it should catch down to the dollar, but the fact that we're still up here above monthly VWAP is telling me like maybe the euro is going to stabilize now and get stronger against the dollar. We'll see. I mean, you get how it is, Steve. That's why you've been here for the last couple of weeks, and on your combined accounts, you know, you're up over 9 grand. That's because you're here going with all the analysis, you know, and learning. Yeah, micros are nice because they do allow you to control your risk a lot better, especially on those small Apex accounts, right? Like, you don't need to make like I mean, obviously making $1,000 a day is nice, but you know, if you only have like a 2,000 or a 2,500 cushion, you know, a couple of bad days and you're done with that funded account, right? That's why those challenges are so hard, because everybody, I mean, I'll have a bad day at some point, you know, I have bad days. I try and keep them minimal, but some days things just don't work, you know? And if you only got like a couple thousand in cushion, you know, it doesn't take really more than one bad day to wipe out. So yeah, those micros are not a bad idea. But they don't have them on at least they have them on CL. Yeah, exactly. And then if you can keep, let's say you can consistently keep making 300 a day, you know, that's 1,500 a week. That's 6 grand a month. I mean, how hard do people have to work at a normal job, you know, to make 6 grand a month? And then this is scalable, right? But it takes work. And people kind of think that it, you know, it's going to just happen. It's not. Now, with that said, the process can be a lot faster when you have a methodology that works. You have somebody like me who knows how to teach it, because I came up with it and I'm here live streaming. I mean, this channel gives, from what I've seen out there on YouTube, with OMA and also the way I'm streaming it and teaching it to you guys as we're, you know, trading. I mean, had I had something like this when I was first starting out, like, I would have made progress way faster. Like, my mentor was a genius and probably one of the best traders to ever live, and, you know, brilliant, but wasn't a good teacher. Like he was just, he's kind of one of those guys where like he was so brilliant that he couldn't really teach. You'd be like, well, what are you seeing right there? And he'd just be like, well, you know, and he's like, don't you get it? Like, no, I have no idea what you just said, but maybe it made sense to you. But he was just he wrote good books, but he was just too much in his own thoughts. So that's where I bring it with OMA. I am a social person. I'm a good teacher. You know, the master's degrees have helped me refine presentation skills, teaching, all that kind of stuff. So it's a perfect package of stuff for those who want to learn how to trade. You're going to learn how to trade. You're going to make money, as you see. But it's not sexy. That's great. You know, this channel is for winners. If you're a winner and you want to win, then come hang out, put in a little work, and you'll win. If you don't want to win, and for people who don't want to win and want to sit around and, you know, be a victim and complain about how tough life is, that's great. I get it. Life's not easy. And then this probably won't be the right channel. But if you want results and you're willing to put in a little work, then you found the right place. That's what it comes down to. So let's go ahead, and we got nat gas coming out. So we got a very mixed day today. I'm happy so far with the way we're handling it. Navigating everything very, very well. Looking at the ES, we've got I mean, we're squeezing higher, but we're squeezing higher on the back of a strong dollar right now. Bonds are cooperating right now for the squeeze, but you know, every time they rally, they get sold into. So this squeeze higher on stocks is gonna, you know, run into some resistance when the 10-year stops pushing higher here, and we don't really know. We'll see. There's still a lot of resistance here on the 10-year, like just like yesterday here on the 10-year. This was all of a sudden, you know, we were up here. It's like, oh, you know, we're going to go higher. Rates are going to come down. It's like, no, this thing just started to tank. And we'll see what happens today. But this is why metals, you see, this is why it's so important with the cross market analysis and using OMA and everything, all of it together to give you that edge, is because now you can see very clearly, like the dollar is strong. And so there's probably a lot of people out there who just trade only gold. They're like, you know, the dollar's strong, because, you know, they'll look at like the dollar and trade their gold against a dollar. Like, why isn't gold dropping? Yeah, because bonds are pushing higher and rates are coming down and the stock market's pushing higher. So you got to look at all these things together. And it can help you. You're just constantly filtering, you know, bad trades and waiting for the ones that look good. I don't know what our hit rate is since we started the channel, because I'm not keeping track, but you know, we're like 8 out of 10 or something, you know, or something like that. And that's not always going to be that high. In the end, like after 100 trades and 3 months of streaming, making a lot of money live, online, you know, showing people, if our hit rate is 60% wins and 40% losses, and we make 2.5, 3 to 1, great. Like, we're rich. You know, that's all it takes. And I think that's the thing too. A lot of people set up these super unrealistic expectations about what it takes. All you have to do is be consistent. Like, it doesn't have to be sexy. In fact, the more sexy it is, probably the less likely you are to be consistent, you know? Anyways. Fine by me. I will be here trading, making money, and those who want to trade and make money will eventually find us. I do believe in fate and destiny. You know, some people just won't find us, and because the channel's probably not for them. Here's the 30-year pushing higher. Yeah, not gonna buy it, but we got nat gas inventories coming out in 4 minutes, so let's see if maybe nat gas is gonna set anything up. Look at silver. You know, it's back down to 0.4 here. So that strong dollar is having a little bit of an effect on silver, but like I said, you're still right at monthly VWAP right here, and this is just, you know, and silver's a monster contract, right? So you got to be careful. But good in the sense that I don't look back at anything today and go, oh my goodness, why didn't I take that? You know, I try and avoid that. Like if I get through the day and I look back and I go, yeah, no, I took what I wanted to take. I'm happy. Like silver, I wanted to take that trade earlier. I took it and I managed it well, thankfully. But if I looked back on that and it had collapsed, I would have been like, Andy, why didn't you take that? Which is why I took it. Because I gotta, you know, follow my system here. Copper is dropping, so you know, there we go on copper. But if the indices continue to squeeze higher, you know, you may not get that much out of this copper drop. And if bonds are squeezing higher right now, you see, you want to have the pieces to the puzzle. Indices squeezing higher, bonds squeezing a little bit, rates backing off. Here you got a strong dollar. That's causing the metals to drop a little bit, but you don't have all the pieces to the puzzle until bonds turn back around and rates start edging up. For me, I'm like, well, why don't I just wait to take trades when I have all the pieces to the puzzle? That's what I do. The platinum's dropping nicely. Hey, you know, looking back, okay, this short, I had to choose between silver and platinum ended up dropping, you know, much nicer. But I don't regret that because I didn't know ahead of time that was going to happen. I just used my analysis, and I like the fact that silver was at, you know, monthly VWAP, and you saw what monthly VWAP did to silver yesterday. It crushed it, like it crushed it by about 20 cents, you know, or more in a very short period of time. So here's silver yesterday. Here, this is what I was looking for. Imagine you short here on silver up around 23.02, where we shorted today. That's the move you want down. Maybe you don't get the whole thing, but down here, you know, 22.87, you know, 15 cents in silver, 750 bucks. That's what you want per contract, right? So now silver is dropping back below. But this is, I look at all this and like if rates had been a little bit more cooperative, I could have seen myself shorting up in here. But then again, going against monthly VWAP right there, it's just not a smart trade. So who cares what it does? Look at, we got nat gas coming out in 20 seconds. Here's crude. Bring up nat gas. Here's natural gas. Yeah, so we're kind of getting, my level that I'm interested in is up. My level that I'm interested in is 2.22 because on the daily here, I don't have an order, guys. I'm just watching. You got a lot of support. There's the number. Look how wild natural gas can get here during this number. Look at this. So you have a lot of potential support down here into this zone here on the daily. I don't have an order, but that's sort of, you know, the area I'm going to just be kind of looking at. The hourly does have an extension down in there, so let's keep an eye. But you see how nat gas can move. If you're on the wrong side of this, it goes against you quickly. So you got to have a lot of respect for natural gas. So I'm just watching. I don't like that the 4 hour here broke the extension. You see here, that makes me less willing to buy this area down here because I would have preferred if that 4 hour had held above here and now we're pushing lower. I feel more comfortable buying this. These subtle differences do make it, you know, make a big deal. Let's watch it. Everything else kind of a mess today, so let's just see if it goes down to 2.22. Right now, no orders, and I would recommend being careful. Yeah, Steve, you said don't focus on the end result, focus on mastering the process. Exactly. If you just focus on mastering the process, the journey is also a lot more fun. Like every day, I really look forward to coming to the charts and trading. I love it. And it's because I'm always thinking about, you know, how good can I trade my process today? It doesn't mean that I'm going to have a winning day every day. It doesn't mean, you know, that there won't be tough days. It just means that I know if I trade my process, you know, as good as I possibly can every day, not only am I always learning, which is a lot of fun, but the results will just take care of themselves. I understand that that's hard for people to think that way because it took me a long time to think that way too. Not easy. So Steve is saying, you think ultra bonds will push down the daily and the 4 hour are starting to form resistance? Yeah, exactly. And that would be, you know, if that could, if the bonds can start pushing down and pushing rates up, and the dollar can stay strong, you know, may have some great shorts on some metals, you know, later on in the day. We'll see how long I'm going to stream, but I'm here for now. And when I decide to stop, I'll just post everything in the DYX trading members area. So won't miss anything. But I'll stay for a little while. I'm cool. I'm just talking a bit quieter because I'm sick and just taking it slow. But yeah, I think nat gas, I don't see myself buying this because we broke a lot of support here on the 4 hourly. So I like to look for the trades where, like, if the announcement's coming out and I pick a really good daily level of support and I think the weekly looks good for support, I see everything that looks good, then yeah, you can get some really good payouts on those news trades if you know where to look for the entry. That's what I try and do with the stock market open as well. And that's why sometimes, you know, I think in the last 2 weeks, we put those stock market open trades on maybe twice or something. And we're 2 for 2. I don't do it every day because, you know, most days I don't see everything lining up. But when we see everything lining up, we've got the odds on our side. Yeah, maybe. We'll see. But, you know, this, I'm thinking if there's going to be support now, it's going to be down here. Yeah, we'll have to see how 2.2 holds support down here, because that is the level. But I mean, with that said, the monthly chart on nat gas is not pretty. And the weekly is not pretty, but I do think the weekly should want to get back up to its true average, at least at like 2.5. We haven't even gotten there yet. That's way up here. So I feel like natural gas is kind of trying to round the bend here to rally back up a little bit. But we'll see. Yeah, so look at the euro, guys, against the dollar. So, I mean, strong dollar. It's really just depending on, okay, now you've got gold and silver breaking a little bit lower. We'll just let's take a cycle through here. We got ES. Kind of a choppy mess. That 4 hours a little more suspect. Look at NQ. Yeah, 2.4. I changed it to 2.2 though, because what I was looking at is you've got that daily extension at the middle of the moving average envelope down there at 2.2. So that's kind of what I feel about nat gas. That's why I don't have any interest in taking it at 2.4. That's what you're talking about, right? Nat gas. So NASDAQ's kind of a mess. So far, kind of an, yeah, there's the Dow. There's your exhaust on the Dow. So that's good, because that means copper will probably try and get going. Here's the Russell. Yeah, exactly. I adjusted that as we were cycling through, you know, at some point later, because I'm constantly just, you know, making adjustments based on what we're seeing. But by all means, Steve, if you see something you like, I just you know, you gotta be careful with nat gas. Let's see if it comes down to 2.2 and how it reacts to that level. So here's bonds. The 10 years right at the weekly VWAP here. So the 30-year. So the 30-year, I mean, Yeah, they could, like you said, Steve, you got that daily resistance pushing down. The VWAP is starting to, the weekly VWAP is pushing down on price. This could be where bonds start turning, rates start pushing higher, and, you know, we get some decent opportunities. Let's look at the ultra bonds. Yeah, we'll just have to keep our eye on it. I'm not still, there's something. Oh, the fact that we're driving, excuse me. The fact that we're driving up out of the support on ultras, you got to be careful shorting against that or betting on it, because it can push up here higher into this pocket than you think. That's why I'm not entirely sold on the fact that bonds are rolling over just yet. That's gold, that's silver. That's kind of the move we were looking for on silver. But look, I mean, if you look back at this objectively, I mean, this is just a choppy mess that we've navigated well. And we had some good reasons to attempt that short there for sure, with the way the 4 hour was looking, and, you know, managed it well. That's the thing. If you manage your risk, it's like, okay, you took a break even on that trade or whatever, you lost $60, not a big deal, right? But if you manage your risk well, like you were in that trade, right? Both of us were. It could have easily snapped our direction for a quick grand. That's exactly what you want. Whereas when I could see it, you know, misbehaving, I took my profit and got some money out of it. You had your stop at break even and went back, hit your stop at break even. Fine. Like, no big deal. That happens in trading, right? The important thing is you were in the trade, and, you know, 5 times out of 10, that thing's going to snap to the downside and you're going to make a lot of money. That's really what it's all about. Let's look at copper. Yeah, so copper, I think with the Dow dropping, copper's probably heading south now. I don't regret not, you know, taking this just based on what I see for the day and where we are. I'm not looking at anything right now going, oh my God, you know, totally missed out on some great trades today. Not at all. I mean, platinum accelerating nicely. Because if these things continue to the downside, there will be some pullbacks. Look at crude. So nat gas is at 2.204 right now. Interesting. Okay, good. Crude as well. You know, if crude can pull back and rates can, you know, the bonds can stay up a little bit, even with a strong dollar, crude is still potentially a good buy. What to pick the right level, but 75.20. All right. Let's get nat gas. So here's why I switched on nat gas. You have that extension in here. So, you know, let's just keep an eye. That's kind of the level right down here. A little lower than 2.2. But I'm not like crazy about it. It's nothing I would like, you know, rush right into. But it's still a good level to watch. I mean, it might set up a good trade for 11 o'clock, depending. You know, especially because you got the 4 hour here. And the hourly, so a lot of support coming in here to watch for sure. But you got to be careful buying commodities. If the dollar starts breaking through these lows on the euro, then the better play, I think, is like, we don't know what's going to happen today. I mean, Lagarde must have said something that if we end up going down here to the low 08s, you could see some massive down days for the metals, which means they could set up some fantastic shorts the rest of the day into the afternoon. That's the thing about patience too. You know, people always want to see action. If you just wait, the markets, they cycle. You know, you'll get these really good periods where you'll have great trades setting up. You just have to wait for them. Bonds just still aren't on board yet. But you could be seeing, you know, what we could be seeing. See, we got to be aware of the regime change potentially happening, because if the dollar keeps dropping, if the euro keeps dropping, meaning dollar's getting stronger on that chart, and bonds are being bid, if gold and silver are also relatively stable in that environment, but platinum and copper are dropping, that would tend to signal a more flight to safety trade, right? I don't know. I could check the news right now and see some escalations in the Middle East, which is why there's inflows into the dollar and bonds at the same time. So you got to be aware of these shifting correlations. Let's go check the news. But I can see today with the shifting correlations, it's a good day to just stay relaxed and, you know, just wait till something looks really good, and nobody needs to get all worried about not taking any trades. I know you're not, and I'm not, but just other people who out there on YouTube. People think they're learning how to trade. They're not really learning how to trade. They're just looking for an easy way out, most people. But there are some that really will put in the work. I'm just looking at the news. New home sales rose 4%. But existing sales hit record low. Really any interesting news that I can see there? So, as you can see, even here on silver, it's like, okay, it did drop from up here. It was, you know, that's nice, but it's not like it's running away to the downside. It's still choppy, because that's the market we're in right now. Let's look at Ethereum and Bitcoin. Been talking about the bearishness here for a while. I got to check these more often, because that's not a bad short right there on that hourly close at all. You broke the extension here. You're trending down here. I mean, nice pullback in the downtrend. Daly's got a lot of resistance there. I mean, I got to pay more attention to the cryptos, because they're a nice little asset class that you can, when like today there's been nothing, but cryptos could have potentially been a decent little trade. So keep an eye on crypto. I'm gonna after we're finished today, I'm gonna rearrange my scoreboard and put crypto up with. I got to figure out what asset class it fits. It's kind of in its own. I'll probably just put it below energies, so I'm more aware, because right now it's at the bottom of my scoreboard. Here's Bitcoin. Yeah, so that's, I'll take care of that. So what'd you say about maybe UB? Because there's some little emoji thing. NQ moving down. Yeah, not surprising. Bitcoin's, here you can see, getting nice and smoked. Yeah, I mean, it's just because the dollar is getting stronger now. That's why Bitcoin. So if this thing continues here with the dollar, I absolutely wouldn't buy natural gas, even though it can move in its own little world. But I mean, this is a strong move for the dollar today. Strong. This is a big move. So if it holds on to these gains, we need the lowest hanging fruit is definitely shorting, because gold and silver haven't even gotten going yet. So if the dollar keeps going like this against the euro, and bonds turn around even a little bit with rates going up, I mean, metals are going to dive hard and fast, and that could be the play for the day. Gotta wait for it to come. Really, it's going to depend on the 10-year here. This is really what it's all about. And right now you see the 10-year so far is kind of hanging on up here. That's why metals aren't crashing. Look, see, gold is kind of hanging on. This is almost like a flight to safety trade, a little bit. So let me think about that. If the dollar continues to get stronger and bonds, let's say bond, because right now we have bonds going up, dollar getting stronger, gold continues to hang on, that's flight to safety. What does flight to safety mean? That would mean stocks under a lot of pressure. They would be, and copper, and probably platinum, Bitcoin, but really stocks. So that would be, if we continue to see this type of, and then which one would be the most susceptible? I would say, you'd probably have the, take a look at the NASDAQ. So see, this is what you want to see. You want to find the divergence. If bonds keep going up while the dollar's getting stronger, and gold also, then the short could be in the indices. Yeah, it could, definitely. I just don't like yesterday you had a really clear structure. That's why we shorted right there yesterday, because you had a nice clear structure. Here so far, you see how this is this overlapping structure. I don't typically like to take trades within this overlapping structure, if that makes sense. So even though this could be setting up some resistance here, or even up into 17,776, I'm not liking the structure on the NASDAQ right now. Here's the Dow. There's the Russ. It's just a strange day. I think the charts are just showing until something gives one way or the other with bonds, or we'll see how the correlations change. But I think with all, we had a lot on the docket today and we got mixed results. So if you look at the reason the market's doing what it's doing today, which is kind of what we talked about at the beginning, but you had, because you're getting mixed signals right now, which tells you if you're getting a strong dollar, but bonds are being bid, gold and silver are kind of chopping around, stocks are, pretty choppy. The reason is because the market's digesting, it doesn't know what to make of this data that came out, because you've got, we had the ECB interest rate decision at 8:15. That was, 4.5% as expected. But then you had durable goods at 8:30. That was a big one. And that came out at 0% against a forecast of 1.1%. So that right there is like, oh, okay, yeah, maybe, the economy is weakening a little bit. The Feds can, the Federal Reserve can ease off, start reducing rates in March, right? So that was sort of a stock market potential positive, bond market positive, rates coming down, right? But then the dollar should have also gotten weak on that, and it didn't. The dollar's getting stronger against the euro. But the reason for that is because we had strong GDP growth at 8:30 also. That was a massive announcement. Came in at 3.3% against, expectation of 2%, right? So that's actually, oh, maybe the economy is doing well. So, the Fed will keep rates higher for long, right? So those two news pieces are giving different information to the market, and you're seeing it with the correlations, right? But then you also had the continuing jobless claims, which came in at 18,000, versus or no, it's 1.8 million, whatever it is. I think I read Zero Hedge said that the jobless claims came in, they came in higher, I think. So that's like, oh, the economy's weak, so GDP showing, oh, it's strong, but jobless claims high, so economy weak. So it's, the market's, stuck right now. It doesn't really know what to make of all this, and we can see that in the correlations right now with everything that's going on. So that's a huge benefit to be able to see that, because then you're not just getting in and out of stupid trades. Like, you want to get into the market when things are lined up and you've got a nice opportunity to make money. So the 10-year treasury here, this needs to really start. What I'm waiting for the rest of the day basically is that if the dollar can maintain the strength, because the dollar is very strong right now against the euro. So if bonds can just come down a little bit from where we are now and rates can kick up a little bit, then we're going to be able to play some metals from the short side. I think that's the smart play. So far, gold has not dropped. NQ bounced, but I think we might see another short potential. Oh yeah, we talked about that. Yeah, exactly. So we got to let that price structure sort of work itself out. So here's silver. Copper, you know, because you don't know what's going to happen today. Like copper, if bonds really turn around and rates start going up, you know, copper could end the day down here. And if it's going to do that, that's a long hourly trend run with some pullbacks to short, right? So never need to be in a rush to get in on something. I know you're not, but I'm speaking to most people. Platinum. I'm going to keep an eye on things, but I'm mostly interested. Look at nat gas here. So just based on what I'm seeing, I mean, nat gas is a bit of a, you know, it's not correlated, but I don't feel comfortable buying this. It's not like, we are, weekly VWAP is at just below here at 2.2. So that's the area to watch, but I'm not looking at this like, oh my God, I got to take natural gas. Like, I don't care what natural gas does off this level. Based on the scoreboard, I don't need to take it. But Steve, if you've got a good feeling about natural gas, you know, you got to do what you got to do. But I'm just telling you that I'm not doing it. I think the powder is better held on to. Keep the powder dry for shorting metals. And the catalyst for shorting metals is going to be bonds just dropping a little bit, and metals are going to shit the bed. That's what I want to wait for. I mean, you can already see copper and platinum are leading us to the downside. And if bonds start to slowly turn around, copper's going to have a big down day, which is kind of what we thought from the day, right? There's nothing wrong with just waiting. You know, you've got your thesis. Just let the market show you and tell you. And then when the pieces are in place, you know, we take the trade. So copper could have a really good trend to the downside the rest of the day and give nice pickings, while everybody else is, you know, scalping the NASDAQ, driving themselves nuts. But hey, for those that can do it, that's great. I think I'm just, you know, when you get older, there's a lot of people on YouTube that are like in their 20s and 30s, and you just, I get it, right? When I was that age, you just think differently. Like, just as you get older, like mid 40s, heading toward 50, you just start to feel more relaxed about everything. And it leads to much better trading, but it's hard to emulate when you are in your 20s or 30s. I mean, it was for me. I think for most people. Wouldn't you agree, Steve? Like when you get middle age, you just kind of like more relaxed and focused on your family, and like you just, that kind of transfers over to the trading. You're just not in the same kind of rush to like take trades, and plus you got families to feed, right? So you can't take the same kind of risk as when you're 20, 25. But I think that's a good thing. Like usually when you're 25, there's a good time to take risk, and as you get older, you can find those right moments to take the risk. Whereas when you're younger, you end up just taking a lot of stupid risk. I did. But you learn with age. All right, so at 10:56 a.m., question for me is exactly. Less stress, less chaos. Same thing for me. I'm like, if anything complicates my life, I'm like, no. I don't even care how much money. I'm just like, no. That's why like OMA for me is about like quality, you know? It's like, oh, but You know, if you hired a marketing campaign, you could have like 1,000 subscribers tomorrow. I don't want 1,000 subscribers tomorrow. That would just be a nightmare. That would just, it wouldn't be worth the money, because it would just be hand holding and babysitting, and that's not what this is about. Not for me, anyways. So gold here is not. Look at this. It's just a mess. Silver also just pinned to this 23 area. You see here so far. I'm definitely looking to play the short side, but I'm not just going to short right here in the middle of the range. So wait on that. Let's look at copper. Trending down. So now we got to see if we can get going a little bit. I'm not going to take that, but I'm interested. Keeping an eye on it the rest of the day. Platinum, we got to wait. Get crude. Yeah, platinum always moves. I like platinum. It's a good market. You know, it's just kind of, I don't want to say unlucky. I made some money on silver. That's fine. But obviously the short we took, had we taken platinum when we were choosing between platinum and silver, you know, platinum ended up working better, but you never know that. And I can't watch two at the same time. So I picked silver and got what I could out of it, but platinum was the better one today. But you can see overall the pre-market analysis we do together on the channel every morning, how we're putting the things together. You know, what's dropping the most today? You know, platinum. What is it? A metal. What did we say we thought would be the best, you know, play for today was metals, either silver, copper, or platinum to the downside. So, you know, not too shabby. So here's crude. We're getting a little bit of a pullback here. Yeah, I don't like where this is at, to be honest. I'm not going to take it. I'm okay. That's the thing. You just got to be okay you got to be okay saying no to, like, every trade you take. You're going to say no to 9 trades that are kind of like, it doesn't look bad. This might hold support here on crude. It might not. I just don't like where it's at. Looking at everything. Not for me. Nat gas, I'm already not interested in. Look at the dollar here. Just the euro futures. I mean, just the dollar is just unrelenting against the euro right now. So I just, if bonds roll over just a little, metals are going to be great. But see, right now, this is also what's really interesting, guys, because dollar making new lows. If we start to make new highs in the 10-year treasury while the dollar is making new lows, that is a flight to safety shift we're seeing, right? Because bonds are being bid, dollars being bid at the same time. And if that is the flight to safety, then it's going to be, that'll hold gold and silver up a little bit, copper and platinum, which we're already seeing, and then indices will be the ones to focus on if that, you know, is the, you know, if that's the set of correlations we're looking at. And you can already see the indices now off their highs. I'm not going to short that. See, this is how we're just putting it together. So when the right trade, so you got a nice hourly pattern here on the NASDAQ for sure. But again, I'm just not going to take it based on what I'm seeing here on the 4 hourly. There are better trades to wait for. I don't like that overlap. So, you know, probably the people who are long NASDAQ are going to be in for a surprise right now, because it's, you know, likely that it's going to go down. But it's just not good enough for me to take. Here's the Dow with the Russ. Yeah, so it's really, it's just going to hinge on the 10-year, and, you know, gold, silver is still kind of sitting there. So I'm going to call it a day for the stream, but I will be, you know, posting any updates I have to the members area after the market, you know, after I shut down the stream. So you guys can check that out. If I see anything set up, as always, I will let you know what I'm trading and key levels. I'm keeping an eye on the correlations. But for right now, I've left you with what I'm waiting for. So I'll leave you with that, and Thanks for joining me today, you guys. It was a pleasure to be here, and I think we're getting through the week really well. You know, I've been sick all week, but kind of fighting through on low energy levels, still making money, still making good calls, still holding it all together, and I've got some great momentum, you know, going here the first couple of weeks of live streaming. So I'll be back tomorrow morning. We'll close the week strong and just keep doing it and keep growing, and we'll keep attracting more quality people who want to learn how to trade, which is awesome. All right, so that's it. Take care, everybody. Thank you for today. Thank you, Steve. And you guys have a good rest of the day. Don't do anything stupid. Don't take any dumb trades. All right, I'll see ya.